Good morning, everyone. Welcome to the session. And today is the first day in which we'll be having this session. And as you're all aware, and has been displayed on the screen, this is a workshop termed Strategic Virtual Financial Reporting Workshop. This is for professionals alike who is interested in developing skills, knowledge, and professionalism in the field of financial reporting, as financial reporting serves as a central hub to every organizational survival and sustainability. The prosperity of an organization resides within the finance function, and therefore, every finance personnel have a responsibility to equip itself with modern skills as the dynamics of our business environment is changing due to technological disruptions and also due to events that is ravaging presently with respect to COVID-19 pandemic, which has somehow changed the dynamics of every businesses. And we are now in the period of a new normal where business models will change, where strategies will change, where diversification will be the order of the day because of the twist that it has brought to the global economy. And therefore, finance would not be kept behind because the function of finance and accounting is more or less both historical, current, and also future. And therefore, we need to be far ahead of the dynamics. And that is why we are where we are today. And that's why this program is designed for us all in order to acquire knowledge and share knowledge as far as practicable. Okay, now to start this program, one of the cardinal guidelines or rules is that we must all put our video on at every point in time. Please let us put up our videos on. This is a class and a session. Okay, let us ensure we put our video on at all points in time. I still have some that are yet to put it on. Please let us put it on so that we can interact and more or less reflect a live situation and a live class. Thank you very much. Now, why this delay is that some people still have challenges to log in. And it's because I discovered that some of us did not adhere to the guideline or directive given. That the way we have done it is that we will not be admitting people in or in waiting room or authorizing. What we have done is that we have set up a control that once you are eligible to participate in this program and you have registered through that link and you get a notification and a link to participate in this Zoom, what we ensure is that without anybody's authorization, you are liable to come in alone. And what happens is that nobody can use the ID to come in. And anytime you come in, you can only be aligned with the register ID. And that's the beauty of it, so that nobody will be kept in the waiting room or nobody will be stranded. Okay, the only challenge we had was the first day where some people did not follow the instruction to the letter, where you need to have created a Zoom account. And luckily, the Zoom account you are required to create is at zero cost, it's free. It is only at the administrative end here that we have incurred costs in order to have access to this program or lecture. Okay, thank you very much. I still await two participants not turning up their videos. Okay, please, Anayo. Okay, I think we have a discussion. Okay, I think Anayo is going to be having little exception. She's a nursing mother. Any period she's more or less trying to feed the baby, the camera might be off or to attend to the baby. But others, please let us ensure that at every point we are part of this program, our cameras are on. Okay, thank you very much. And yesterday we sent the schedule or the calendar and the topics. And let me share that again on my screen so that we can more or less start with that and let us have a global picture of what it is. Okay, this is the first calendar that has been created. And again, you know that dynamics of the reality might change from time to time. What we ensure is that it's not going to change drastically. Okay, and there might be need to bring in one or two other things that is going to add value in addition to what we have set. And that's what we are trying to do. But this is the minimum expectation of the course outline we need to more or less come across in the course of this program. And I believe we all understood the coding that is going on here. Okay, what you need to understand is that our Saturday's classes will start from 10 to 4, while our Sunday classes will start from 2 to 6. And based on the days, the period, and the time, the code you see in front of it speaks to the course outline that might be covered within that period. And as I have also said, is that this calendar is more or less like we have in total, the number of contact hours we have in total is about 40 contact, not 40 contact hours. We have 5, 5, 5, 5, 5, that's 25. We have 100 contact hours, that's contact periods, which is equivalent to 200 hours. But again, this is more than sufficient for us not to have extra sessions. But peradventure we have extra sessions, it will be insignificant to this calendar with respect to weekdays or public holidays, but that will be much more less of the norm. Okay, and I want us to say one or two things about what we are seeing or what you have checked in this calendar and in this course outline. Is there any other expectations you demand that is not in this calendar? Let us take note of that. I want us to say one or two things before the class starts officially. Any consideration or any concern about this calendar? Okay, now the rule is that anytime you want to speak, you can raise up your hand and you will be automatically given access to unmute. The essence of muting is to reduce distractions so that noises will not be coming from everywhere and there in order to affect us. When you want to speak, you can raise up your hand. When you have any commentaries to make or questions to ask on the spot, you can also put that on the chat box. Okay? If the question is generic, is for everyone, you more or less click to everyone. If it's something that probably you are not hearing or anything, you can also private chat with the direct message. Okay, we'll be using those tools in order to be more efficient in the course of this program. Okay, if there's any contribution or any question at this point, can you raise up your hand so that you can be given right to unmute, or you send a chat and which can be read. Okay, Bemi, I've been given right to unmute.
Hi, everybody, morning. Just to ask, I know Kelechi said something about Python and using technology for as part of our accounting program. I don't see that on here in your course outline. Is that separate, or does that fall under the TC? There's a TC that TC12. Is that it, or that's something else?
That's it. That's the technology.
Okay, that's fine.
We have the blockchain, the artificial intelligence, machine learning, business intelligence, Internet of Things, and from there, that's where you're going to introduce you to Python and some other things.
Okay, thank you.
Also, follow up to that, you already know that many security agency, securities commissions around the globe, SEC, has more or less recognized cryptocurrency as a form of asset class in investment, not as a currency, but as an asset class. And therefore, over time, there have been more or less theories, propositions, consultations on how should it be accounted for. And that will be taught after you have been introduced to blockchain technology, okay? So that we can understand what kind of class of asset can it be and how can we account for it, even though presently there's no IFRS for its accounting, but there have been more or less position papers and some guidelines that has been written by authors, by researchers, and by professional firms. All of this is what we also consider immediately after discussing or introducing ourselves to technological role in accounting. I think that speaks to that fact. Okay, who else? Baby, you can raise down your hand. Are you still raising up? Okay, who else? Okay, Oladokun said, yeah, Oladokun, okay, sorry. I think I missed it up. It is Oladokun that is the nursing mother, not Anayo Adne. Anayo Adne, please put up your camera. Okay, please put up your camera. Okay, even though we can't see your face, but at least you are seeing somebody behind, so that it's not a robot in the field of technology that we are talking to. Okay, thank you very much. Okay. Who else have one question before we move to the next section? Hello? Okay, if there's none, we are going to look at this as an introduction to financial reporting. Okay, and this will be more or less the first level of our discussions as we move on, and where we'll be talking from the preface perspective, what is financial reporting, and we'll start to understand the role it plays in businesses, and we'll start to look at the framework that exists within financial reporting as a system that supports the business at all points in time. Now, when we talk about financial reporting, what can you say is your understanding of financial reporting? And again, remember that these sessions will be participatory and will be much more interactive because first, I'm talking to professional accountants and those that are practicing or have practiced in the past. Therefore, we will be interacting much more to gain knowledge from one another. Now, from your own individual perspective, what do you consider as financial reporting? And later on, what objective does financial reporting tend to serve? The floor is open. If you are to contribute, kindly raise up your hand and you'll be granted access. Okay, if Echuku, you are given the right to unmute. Can you do that?
Yes, thank you, sir.
Okay.
Good morning, everybody.
Good morning. We can't hear you.
The financial reporting has to prepare the financial organization and the process of presenting what the position of that organization is. Basically, it's telling a picture of the story of an organization in financial terms, the whole process involving how you tell that story to the respective stakeholders.
Okay, thank you. You could put up your hand down. Who else want to? Otherwise, I'll put up a call to one or two persons. Ifechuku, can you put down your hand? Okay, you've done that. Okay, Nuru, I've given you access to unmute. What can you say about your understanding of financial reporting? Mr. Nuru, you are given access to unmute. Okay, since Mr. Liu did not decide to talk, okay, can Bemi talk? You have not.
Like the lady, okay, like the lady said, it's just representing financial information for the users of that information. So be it management, stakeholders, the public, and it's information with respect to a particular time.
Okay, thank you very much. Nuru, are you with us now? Can you unmute? Okay. Olawale Tiamiyu, can you unmute? Olawale, we can't hear you. Wale, we can't hear you. Wale, we can't hear you. Nuruddin, can you continue?
Okay. Good morning, everybody. My understanding about financial reporting is that financial reporting is the process of presenting and preparation of financial and non-financial information of an entity in a standard format.
Okay. Can you hear me now?
Oh, yeah, we can hear you. Olawale, okay. What's your view?
Okay, my view is financial reporting is the disclosure of financial and related information to all stakeholders. If I say stakeholders, I mean both management stakeholders and external stakeholders. And information is provided to the stakeholders at a particular time, talking about how the entity has performed over a specific period.
Okay. Segun John.
Okay. Good morning, everybody. As the previous speakers have said, financial reporting is a way of presenting an organization's financial results, performance over a period of time to the stakeholders of the company, including the management, the shareholders, and the general public.
Okay, thank you very much. Mayor Odum. Mayor Odum. What is your view of financial reporting?
Good morning. Can everyone hear me? Can you hear me?
We can hear you.
Okay, my view, financial reporting refers to like standard practices that give stakeholders and all stakeholders accurate information about an organization.
Okay. Anayo.
Hello, good morning, everybody.
We can hear you.
Hello, good
Yeah,
morning.
it's very low. Good morning. Can you speak loud?
Hello.
Hello, we can hear you, but it's low, faint.
Hello, good morning.
Good morning.
Pardon me, I have a okay. In addition to what others have been saying, financial reporting basically is when an organization at a glance presents to stakeholders its performance for a particular period of time. Thank you.
Okay. Donka.
Hello.
Hello.
Can you hear me? Did you hear me rather?
Yeah, we heard you. Donka, are you there?
I'm here. Good morning, everyone. My understanding of financial reporting, it has to do with the process of preparing, presenting financial statements to the various users so that they'll be able to make an informed decision about the enterprise.
Okay, thank you very much. Last but not the least, Madam Oladoku. I believe you are there. Okay, probably she's attending to the baby. Okay, let's move on. Let's move on at this level. Thank you very much for your contribution. Now let's look at it from this perspective. Managers of businesses are given leeway, are given the authority and responsibility to do the bidding of the business and to ensure that the objective of business has been set is carried out to the benefit of the owners and other stakeholders. Now, this happens in this slide to say that at the end of the day, you need to give a stewardship account of what has happened in terms of activities that you have engaged in and the financial implication of those activities in terms of your spending, your income, and the performance of such an activity with respect to profitability. And lastly, the strength of such business as a going concern, which speaks to sustainability. All of these are means of providing information by way of feedback to the stakeholders in order for them to reappraise the performance of the business and take decision on the basis of how they can continue to operate in that business. Okay, in that light, it means the role of financial reporting is to be present at every point in time on a continuous basis to make available information about all what has gone within the organization or within the business and be able to process such information in a manner that provides effective feedback with respect to information for the purpose of taking future decisions. Because there's nothing they can do about the past. But the past, information about the past will be suitable for them to take decision about the current and about the future. And that is that, which then means that in summary, when we talk about financial reporting, we can talk about financial reporting as a system that allows businesses to communicate information about its performance, about its activities, about the event that surrounds it to the users or to the stakeholders of that entity. Later on, we are going to look at who are the stakeholders of a business to which you are to communicate to. Which then means that in summary, financial reporting is a tool for communication. It's a tool for disseminating financial information and also disseminating non-financial information. Okay, which means things have changed from the perspective of accounting and finance, that we are no longer just accounting for what has happened. We are now also seen as a strategic business partner who is adequately involved as an advisor in decision making. In that light, what then now happens is that at every point in time, we must ensure that we recognize the role of financial reporting as a system or a tool for communicating financial and non-financial information. And when we now narrow it down, we can conclude and say financial can be likened to a business language. That is the language businesses understand. Language stakeholders of businesses understand in order to take decisions about their businesses. And that is what we are talking about in this. That is financial reporting for us to see. To take note of it is that financial reporting is not about accounting. Critical aspect of accounting serves greater purpose for which the objective of financial reporting is achieved. But financial reporting is more encompassing, so that it is a heartbeat that provides information to every stakeholder in a manner that is suitable for them to take what? Decision. And that's what we are trying to disseminate, so that we can have a change of narrative or a change of mind on what financial reporting is all about. And that's why in this write-up that I try to put up for the immediate and the future, I try to make people understand what role does financial reporting take into this world. Okay, and today you hear things like financial reporting, you hear things like corporate reporting. They are the same, they are one in one. It's just a nomenclature, okay? Now, even when you look at it, for example, it's ACCF currently changed the stuff some few days ago to strategic business reporting. Everything still speaks to financial reporting, which means ability to put up a system to providing information to users of financial report or to stakeholders in the business, information, both financial and non-financial, for the purpose of making decisions. Now, what is the most important thing for us to consider now? I'll take us to a short note that I'm going to put up. Let me share that slide of a plain sheet. Introduction to financial reporting. Now, we'll first of all concluded in summary to say financial reporting is a business language. And what business language means, it is a language to which business activities and performance are communicated to the stakeholders. Now, if that is our position, the next thing we need to take into cognizance is that there is a framework for this system, which we call financial reporting. Now, there are two parts. You are going to look at the frameworks. The first perspective is that we look at what we call regulatory framework. And thereafter, we look at conceptual framework. Now, when we say regulatory framework, who can give us a fair idea of what we are talking about? Who can give us a fair idea of what we are talking about? When we say regulatory framework, who can give us a fair idea of what we are talking about? Okay, Ifechiku.
For me, regulatory framework refers to, for example, the IFRS and embodies countries where national accounting standards still apply, national accounting standards as well.
Okay, who else? Okay, if there's no other contribution. Now, regulatory framework from the word go and even from the literal perspective comes from the word regulation. And what does that mean? Regulation means that there's a structure that is put in place in order for it to function in the manner to which it is expected. Now, regulations are much more structural and legal in nature. What it speaks to is that a form of law establishes regulation. Now, when we talk regulation for financial reporting, we can also view it from two perspectives. Now, what are the perspectives? We can look at it from local regulation, and we can look at it from international regulation. Now, what is the difference? Local regulation means regulation based on the law of a jurisdiction. For example, in Nigeria, local regulation is based on what the Nigerian laws or constitution, as the case may be, as provided. And we're going to look at what is local regulation for financial reporting in Nigeria. Apart from local regulation, we now have international regulation. Why? Because we now operate in a global environment, what we call the global economy. And you cannot be in isolation. Even though we might not have been fully integrated, but we are equally integrated to the global economic and business environment. Therefore, there are more or less efforts by developed countries, starting from G7, G8 up to G20, in promoting international consortium and consensus towards having a common regulation for financial reporting. As I've said earlier, financial reporting serves as the hub, and finance as a function serves as the heartbeat of every business. You now find out that financial reporting provides information for decision making. And there are different standards and rules across the globe, which make it now difficult for synchronization and free movement of capital, all because in different jurisdictions, different rules apply. Therefore, in order to more or less synchronize activities and eliminate such a bottleneck resulting from financial reporting and different rules, therefore, there have been more or less agitation over years, starting from '73, where a committee was set up, which was called then International Accounting Standard, for the purpose of putting off standards for financial reporting purposes that is generally applicable and acceptable across jurisdictions of the world. This has developed over time and has metamorphosed into something that is now generally acceptable virtually in most countries of the world, including the United States of America. And therefore, international regulation is borderless, or I could call it a cross-border regulation that is not specific to any jurisdiction, even though it might sway towards some jurisdictions than the other because of the level of their participation and involvement than others. Okay, we need to take note of that. And the beauty of it is that international regulation cannot sail in any jurisdiction if the local regulation is not amended to adopt it as part of its regulation, which means it must be domesticated by the instrumentality of the law of that jurisdiction for it to be binding. And that's why you guys might be aware of in 2011, when the then Minister for Trade and Commerce then presented before the FEC, Federal Executive Council, where the FEC now have to approve the adoption of IFRS. And to adopt it into Nigerian law, that was what brought about the enactment of FRC Act 2011. FRC stands for Financial Reporting Council Act of 2011. And that was the act that established Financial Reporting Council of Nigeria as the ultimate body responsible for financial reporting in Nigeria. And that's how it has been up to date. Okay, and it is as a result of FRC Act that it is now a law in Nigeria to follow all of the principles of IFRS. And that is what we need to understand. But today we are going to look at local regulations. Okay, we are going to look at international regulations, as this falls under what we call the regulatory framework. Now let's start with the local regulations. Now, local regulation in this slide we are looking at Nigeria in context. Okay, for those that are in the US, there's also US regulation. Okay, and for those in UK, you also have UK regulation. Okay, and for those in Nigeria, we have Nigerian regulation. Okay, now let's speak to Nigerian regulation in this case, because primarily, even though some of us might not all be in this country, but we are all Nigerians. Okay, now for Nigerian regulation, I first identified to us that Financial Reporting Council Act is a regulation for financial reporting in Nigeria. We must take that as a fact. Okay, now I can go ahead to show you copy of this. I'll try to download it online. Okay, let me share it with you guys, and I'm also going to share you a copy. I'll put it on the chat. Okay, I believe you can see it. Now you could see that this was contained in an official gazette on the 7th of June, 2011. Okay, of which takes effect for financial reporting period for 2012. Even though, as we go on, at the time, we also look at history of our adoption of IFRS so that you can better appreciate where we are coming from and where we are today. We'll more or less look at that later. We'll look at the first-time adoption of IFRS in Nigeria, the process we took and all of what we did in order to get to where we are today, where IFRS has now been the language you speak from time to time. But again, this is the FRC Act. I remember as a finance professional, you are, after accounting and finance, you are closer to law. When I say law, you are closer to regulations, rules, and acts. Why? Because the foundation of anything you do, for it not to be a nullity, must be found from the law. Which is, for example, you can't be a CFO of a company without understanding end-to-end the provision of companies law or companies act. Like in Nigeria, Companies Allied and Matters Act, CAMA, now 2020. You must know it because anything you do, the first thing that must stand is that it is backed by law. Before you can now start to talk about your expertise, your professionalism, and some other things. Which then means that I expect everyone here who is willing to develop himself in the field of financial reporting, in the field of accounting and finance as a whole, to keep abreast of the information contained in this regulation. Now, when you look at this regulation, it has various parts. But the part that concerns you much more is to first of all look at part 1, which speaks to why the establishment of this act. What is the objective of this act? What is the membership of the FRC as a council? Now, but what is also more paramount is that we need to understand that the council operates and functions through its directorates. Through its what? Directorates. Now, we have about 7 to 8 directorates. And let's look at it from what we have here. The first directorate is the Directorate of Accounting Standards for private sector. The second directorate is Directorate of Accounting Standards for public sector. The third directorate is for auditing practices standards in Nigeria. The third directorate is for Directorate of Actuarial Standards. The next directorate is Directorate of Inspection and Monitoring. This is where compliance comes in. Another directorate we have is the Directorate for Valuation Standards that speaks to all forms of valuations other than actuarial valuations. Why? Because actuarial as a field is unique and has its own elaborate standard. Why every other valuation, whether estate management valuation, whether surveillance valuation, whether financial instrument valuation, all form of other valuation or property valuation falls under the Directorate of Valuation Standards, and there are standard issues. Now, in Nigeria, we have not issued any standard other than International Valuation Standard, which I'm also going to share to us. The beauty of it is that you will be having access to a lot of resources that will make you a functional financial reporting and a functional finance personnel of repute that is of the immediate generation and the next generation. There will be drastic changes as time goes on in this field, and it is those that can keep abreast of it that might likely survive. As we are going to discuss later when we get to technology in accounting, technology will not come to replace the function of a finance professional, but it's going to come to replace the function of those within the finance and accounting function that are not keeping abreast of development. Because technology will not think for you. It only assists you to be more efficient in processing things on your behalf. Machine learning, we only learn from human beings and grab it, but at every point in time, the dynamics changes, which the machine also needs to learn the new changes from you. The question then is, you will be the driver, provided you are equipped with the knowledge and the skills. Okay, and we need to take note of that. Now, that is that for FRC Act. From there, we also have the rules and conduct of practice, which speaks to ethics and law in accounting profession. And we also have what we call the Memorandum of Understanding and Cooperation Mechanism with other international bodies and with other local regulators in Nigeria. Which then means that we need to understand that the alpha and omega of financial reporting regulation in Nigeria is the Financial Reporting Council. Of Nigeria. Now, it doesn't stop there. We also have another act, which is now of 2020, that regulates financial reporting in Nigeria. That act is what we call the Companies and Allied Matters Act. Now, which we call CAMA. Okay. CAMA addresses everything as regards a company. Okay. And part of those aspects that it addresses with regards to a company is financial reporting and statutory reporting. Now, let me try and bring up CAMA 2020 that has become Act. Okay. Now let's look at the section that speaks directly to financial reporting. We get to section 350. Okay, okay, because of it has been renumbered totally because of the new items there. Now, it starts from chapter 14. Now, chapter 14 has the following sections that affect financial reporting. You have companies to keep accounting records, place duration and forms of records, penalty for non-compliance to section 374 and 375, director's duty to prepare annual accounts. Also, within that chapter, we have forms and content of companies, individual and group financial statements. Forms and content of individual financial statements, what constitutes group financial statement of holding company, forms and content of financial statements, what is the meaning of holding company subsidiary and wholly owned subsidiary, additional disclosures in note financial statements, disclosure of loans in directors and connected persons. All of this, including the kind of report you produce, director's report, procedure for completion of financial statements, what constitutes a modified financial statement, how do you publish a statement? All of this, and also power to alter accounting requirements. All of these are contained in the Act, and a copy will also be made available. Okay, now you need to understand this and have better appreciation of it. But now, when you check here, you add what was stated categorically, and I'll put it to us as a question. Director's duty is to prepare annual accounts, which is also known in some quarter as annual reports, and sometimes it is called annual report and accounts. I'll put it to us. What is the difference between these items? What is the difference between annual report, which is the same thing as annual accounts, financial report, and financial statements? Who can tell me what is the difference? Can somebody raise up hand? Who is willing to contribute here? Who is willing to contribute? Who want to contribute? Can I call a name? Shego, John.
Okay. My understanding of annual reports is a totality of what transpired within the organization for the period under review. It could also include other things like the products of the company and things like that. But financial statements includes the profit or loss statements, the balance sheets, and notes to the financial statements. While what's the third one? Can you show me that page again?
No, it's on the board. You can see it now. Annual report, financial report, and financial statements.
Okay. So that is just my contribution. That is all I can say.
Okay. Who else want to volunteer before I call name? Who else? Duncan. Okay. After Duncan, Oladokun will speak. Duncan, can you talk?
Okay. For annual reports, as the name implies, is mandatory. Something that is done annually. According to like Nigeria, there are laws on account preparation and presentation for a financial year. There is a timeline for it. So annual reports is actually a kind of a statutory requirement. Inside the annual report is all encompassing. Include a business outlook report. You can also project what happened with in the past year. And financial reports, you now narrow the financial aspect of the report. That is where you talk about your income statement. And the financial statement, that is with your P&L and I think the financial statement is just P&L, and balance sheet and the cash flow. That's my understanding.
Okay. Yeah, Oladokun can speak now. I think I've granted you access.
Good morning, everyone. To my understanding, annual reports, like has been said, it encompasses financial and non-financial reports for the organization for the period within the review. Why a financial report has to do with the finance aspect, basically financing what it entails during the year, statement of financial position, statement of the income statement, the cash flow. Why a financial statement is just like a statement, is like a summary of the financials itself. That's my own understanding.
Okay. Now let's look at what is on the screen. Okay. Now let's try to look at it from this perspective, whether there's a clear difference in them. Now, what I've put up in a voluminous material I'm putting up for financial reporting that speaks to both local and international financial reporting, which I believe will come out in no time soon, probably to the end of this year or not. It has been a project I've been on for years in order to put something substantial in place. Now, financial statement is what we know more about. Okay, but emphasis now is now coming towards financial reports, and we also know that there's what we call annual accounts or annual reports. Now, what are these? Now, the first thing is that let us go to our area of strength, financial statements. Because when we get to conceptual framework, financial statement was defined in the conceptual framework, and the component of financial statement was clearly spelled out in the conceptual framework. But we have not gotten to that level of conceptual framework, but because of CAMA that make emphasis about annual accounts and not financial statements in that regard, that's why we need to break this down and try to understand why. Now, financial statement are a significant component of financial report, according to what I've put on, which means financial statement is more or less like the most part of what we call financial reports, which means that there's still a small slight difference between the two. And also I said here that by company law, companies, especially those that are publicly listed and are all considered significant public interest entity, are usually required to present to the general public, which includes all stakeholders, an annual report, and which is what we saw in CAMA. As at the time I put this up, I was referring to CAMA of 2004 as amended, not even CAMA 2020. But CAMA 2020 is also not significantly different from what 2004 was with respect to financial reporting and accounts, which also emphasized issue of directors have the responsibility to prepare annual accounts or annual reports. Now, which means from the angle of the law, what you are required to prepare Hello? Sorry, my data, I think one of the network, I'm using two network at a time, one of them trip off, and the other one have to trigger on, but it didn't come up on the laptop I'm using for presentation. Is the backup laptop that was able to catch it up at the spot. But again, where we stop, I think I stopped at the aspect of annual report. Okay. Now, as we continue, we said annual report is much more encompassing and much more comprehensive as a report that contains information about all of the activities of the company for a given year. And the terminology I use here is preceding year. The word preceding means that we're reporting real time. Financial reporting is not real time, okay, which means it is reporting on historical basis what has already happened, which you are now communicating to the stakeholders. But the issue about annual report is that their intention is to give shareholders, which are the owners, and every other stakeholders the same more or less leverage which management has about the affairs of the business, so that in every company, there's information asymmetry. What it means is that managers of the business have more information than others because they are involved in the business on a day-to-day basis. What happens, therefore, is that the annual report is expected to bring every other stakeholders other than management up to the level of management's understanding and appreciation of the company's activities and events. On that premise, annual report is expected to bridge that gap between managers of the business that have full information and others that have a belated information. And that is why most company law set out the kind of information that's supposed to be contained in an annual report in addition to the information as required for financial statements based on international standards. Now, what you can find out here is that every information about company activities must portray the event that happened within the year, all of the activities surrounding the business and the models to which the companies operate, before you now talk about financial performance, financial position, and the cash flow, which all speaks to the financial statements of the company. Vis-a-vis every other statutory information and disclosure requirement by company law. Now, let's now look at financial reports. I said here that most jurisdictions require companies to prepare and disclose annual reports and may require the annual report to be filed at the company's registry. What it means is that in Nigeria, for example, CAC is a company registry for Nigerian companies. Your annual report or account must always be filed with the CAC. Now, there are other special requirements also. For companies that are listed in the exchange, they have additional rules that they need to follow, which we are going to see as we move on. And they also have additional burden to file their return to Securities Exchange Commission and also to file to the Nigerian Stock Exchange, and also to publish in their website and circularize to shareholders. Now, let us now try to look at financial report from its own perspective. What is financial report in a sense? Now, I said financial report we are talking about is a general purpose. When you hear financial report, you must think of general purpose. What it means is that this is not a report that is meant for a selective individual or selective group of individuals. It is not a report that is meant to address specific needs, but a report that addresses all needs on an equal basis. Okay, and that report provides financial information about the reporting entity, economic resources that it has, claims that are going to be made against that entity and its economic resources, and likewise, any form of changes that might have arose from the economic resources and claims for a given financial year, which will be made available as a tool for effective communication so that the users of financial report, which are the stakeholders, will have room to make decisions, which means it's a primary tool for disseminating financial and non-financial information for the primary users to make decisions on. And that is the role financial report plays. Whereas significant portion of a financial report is represented by a financial statement. A financial statement, therefore, specific to addressing the 5 statements that are required in line with conceptual framework. When we get to conceptual framework, we are going to see extensively the components of a financial statement. There are 5 sections to that. We're going to discuss that as time goes on. Okay, now that speaks to it. Annual report, financial report, and financial statement. In a simple or in a nutshell, I would say financial statement is a subset of a financial report, which means financial report is more encompassing than financial statements. In a financial report, you will be having things other than financial statements, such as management commentaries. You'll be having things such as integrated reporting, if you have adopted it. And now there is a discussion paper that IASB has issued on sustainability reporting. We are going to share that document also with you guys, where all of this will be an integral part of a financial report, which is beyond a financial statement. All of these are going to be taken into consideration. Why financial report is a subset of an annual report? Because in an annual report, you also have financial report in it, which already has financial statement in it. You also have other statutory reporting, such as director's reports, chairman's statement, auditor's reports, audit committee's report, report on internal controls and governance, enterprise risk management reporting for selected few based on the jurisdiction in which they operate, and some other things like that. All of these are contained in financial reports. Now, to demonstrate that understanding, I also put this to us to show us a typical annual report content of a company, especially within the Nigerian context. And this is what we have on the screen. Can you see it? Any contribution at this point? Any question or raise up of hand? For those joining us newly, okay, let me share the screen. I think I thought I was sharing the screen before now. Hold the lights. Hold on, I thought I was sharing the screen before now. Okay, I think you can see the screen now. This is what I explained earlier. If you can start from here. Okay, let me just read this out for us since I was not sharing the screen before. Please, every other participant, please kindly put up your camera on. That's the rule of participation. Now, okay, I put it here first to say what constitutes financial statements. And I said, financial statements are a critical component of financial report. By company laws, companies, especially those that are publicly listed and or those that are considered significant public interest entities, are usually required to present to the general public, which include all stakeholders, an annual report. And that speaks to why we need to understand the difference between annual report, financial report, and financial statement. I put an annual report is a comprehensive report on a company's activities throughout the preceding year. Annual reports are intended to give shareholders and other interested persons information about the company's activities and financial performance. They may be considered as a gray literature. Most jurisdictions require companies to prepare and disclose annual report and may require the annual report to be filed at company's registry. Companies listed on the stock exchange are also required to report at more frequent intervals, depending on the rules of the exchange. We are all aware here, for those that are working in audit firm or those that are working in publicly listed companies, you find out that you have responsibility by the rules of SEC and NSE to file quarterly reports, quarterly financial statement in line with IS 24, which you call interim financial reports, to file that, and that's what we're saying there. I will now come to differentiate annual report from financial report. We say financial report is a report that provides financial information about the reporting entity's economic resources, claims against the entity, and changes in those economic resources and claims that is useful to primary users in making decisions relating to resources to the entity. While a set of financial statements is a particular form of general purpose financial report that provides information about the reporting entity's assets, liabilities, equity, income, and expense. And I draw up this chart to show us that financial statement is an integral part of a financial report, which makes it a subset. While financial report is an integral part of an annual report, which makes it a subset. Now, to now look at annual reports. Annual reports in Nigeria can be summarized as follows. What is expected in an annual report in Nigeria is as follows. First, you provide general information about the entity. You provide operating and financial reviews, which is like highlights of the current year performance, or the previous year performance. Management discussion analysis is not very common in Nigeria, but it's common to public listed companies where you have to provide activities about your strategy, about your model, about your operating environment, how all of these things contributed to the performance of your organization or your business. Okay, director's reports, chairman's statement to some level, corporate governance report, audit committee's report, auditor's report, content that relates to non-audited information, and before you get to the financial statements. And the financial statement is as reflected in the requirement of the conceptual framework and IS1. All of this is what we need to understand. Now, any other information deemed relevant to stakeholders may be included. Everything you are seeing here is the minimum requirement. Other information can be included. That's why you find out that some companies' financial annual report is more extensive and elaborate than others, especially when you look at banks and some multinationals. Okay, You have other information such as report on operation for manufacturing firms or corporate social responsibility reports, which is now going to be fully embraced in sustainability reports as issued in the discussion paper by ISB for companies with environmentally or socially sensitive operations. Okay? And in the case of large companies, you always see that the annual report is more or less sleek in nature, colorful, and highly glossy publication. When you check for some, especially for banks, you find out that it's much more of something fascinating and it has a lot of efficacy. But again, what matters is not how glossy it is. It's not about how colorful it is. It's about the content in it. Okay. Now, and I also try to show us in each of the sections, what do you see as disclosed by the standard, by the company law. You have the corporate profile. I brought example of some companies. You have chairman statement. I brought example of some companies. How it looks like a chairman statement. How the report of audit committee looks like. Okay. Auditor's report. Management discussion analysis. These are other information that is being provided by companies for better understanding of their business. Okay, all of these are more or less like hypothetical presentation of information as required by company law for an annual account. Okay, by the time we get to conceptual framework, we'll discuss much more on financial statements, what constitutes financial statements and the likes. Okay, now let's go back to our discussion. It's CAMA that brought us to this level, but CAMA is just one of it. Now, I can share this with us. Okay, let me still go back to this slide and you can see what. Now let's look at other regulatory requirements. Now we have other regulations. Let me start with quoted companies in Nigeria. Certain regulations also affect the financial reporting. For quoted company, the following affect. One, SEC rules affects. That is that require them to prepare account on a quarterly basis. Okay, and must be in line with interim financial reporting, IS 24 of the standards. Similarly, NSC regulation also demand that. Okay. Now for banks, they also have additional regulation that impacts financial reporting, such as Prudential Guideline, such as Bank and Other Financial Institution Act, which is now reissued in 2020 along with CAMA, both year 2020. Okay, they also still have NDIC regulation, okay, and they have CBN Act that also speaks to certain requirements that they must follow with respect to financial reporting and record keeping. These are industry specific. For insurance industry, they also have NICOM guideline and they also have Insurance Act of 2007. All of these also have sections and paragraphs that speaks to financial reporting. Okay, for pension companies, we have the PenCom Act of 2014. Okay, initial one was 2004, and it was revisited and reissued in 2014. And that also speaks to the to pension companies with respect to financial reporting. And all of these are very essential for us to have knowledge of from the regulatory perspective. Now here, I put up some rhetorics about those regulations that affect us. Okay, starting from FRC Act, which we have discussed, followed by remember we talked about the directorate. These are also the information here. The functionality of each directorate as it relates to financial reporting and accounting are also spelled out. Now, Companies and Other Matters Act. As at the time of putting up this material, 2020 has not been effected, okay? But the slight changes to it will be made, okay? But I will send you the act, okay? This is for camera. All aspects that affect financial reporting. Also for the Bank and Other Financial Institution Act, which also just was signed later in 2020 into law, we also replace the BOFIA of 2007. It will now be known as BOFIA of 2020. Also, Prudential Guideline also is another one which speaks to certain provisions. Insurance Act, that has not been replaced, is still Insurance Act of 2004 as amended. That also, the aspect that speaks to financial reporting is also extracted to know the requirement as it affects financial reporting. Okay. That speaks to the regulatory in Nigerian context. Okay, we need to take note of that. Okay, any question at this point before we move further? Any question at this point? We'll likely go on break if there's no question before we move to international regulatory framework, where we'll be looking at it from the international context. Okay, if there's none, we are going to go on 10 minutes break as a standard, and we are going to come back to continue from the international regulatory framework. Okay, somebody asks, are we going to go into each of these regulations in details? The answer is no. We can't go because those acts are a pistol on their own. What we've done is that we've extracted the sections that speaks to financial reporting and account responsibility from those acts. And again, it is for you to keep abreast of it because those acts and regulations also change from time to time. Do you get what I'm saying now? Okay, because these are not something that affect us with respect to our profession in that real sense, but they affect us because by law, certain things have to be complied with. Okay, is that okay? Ifechuku, I hope that's okay. Ludy asks, is there a scope covered by annual reports? I didn't understand that. Can you, let me give you access to unmute you so that I can speak to it. I didn't understand that question. Is there a scope covered by annual reports? What do you mean by that? Are we there? Ludy. I've given you access to unmute.
Okay. Thank you very much for this opportunity. My question is actually on annual reports. You know, like financial reporting, there is scope covered by financial reporting from as comprehensive form of reporting, including financial statements and other reporting. But for annual reports, I don't know, is more robust, more than financial reporting. I want to know if there is guideline covered by annual report as well when we are presenting an annual report, maybe scope or guideline to follow in presenting an annual report. That is my.
Yeah, thank you. I think we mentioned that emphatically in two different periods. Look at the screen now. Can you see the screen, please? Now look at the screen. The first chapter speaks about financial statement and audit accounting records. And we said here, companies to keep accounting records. If you go to that section, you will see what it is required, what kind of record are you required to keep. Place, duration, and forms of record. Okay, that is record, not annual report now. Now, directors' duty to prepare annual what? Accounts, which is annual reports. Now, what are the content of this? And they start to label it here. And you are going to see it if you go into the act. First, they dealt with financial statement aspect of the annual report, which is in tandem with IFRS. Okay? And if you go there, you see, they said there, forms and content of individual financial statement. Let me just quickly go to that section. That is 378 for you to see what we are talking about. Now, look at it here. Directors' duty to prepare annual accounts. In the case of every company, the director shall, in respect of each year of the company, prepare financial statement for the year. Subject to subsection 3, the financial statement required under subsection 1 shall include statement of accounting policy, the balance sheet, the profit or loss, note on the account. All of this is required. Can you see it? Now, furthermore, they told you what you also need to include. Can you see them? Yeah. Now, apart from that, forms and content, it is all structured there. And all of this is what I considered before arriving at what I displayed earlier, which I'm going to show you again. When you follow it all through, you will see it. The section that also requires director's report. What is director's report? What must be contained in director's report? Everything is inside the act. Let me show you, let me take you to the aspect of director's report. See director's report. In the case of every company, there shall be prepared in respect of each year a director's report or a report by the directors containing a fair view of development of the business of the company and its subsidiary during the year and their position as at the end of the year, stating the amount, if any, which they have recommended should be paid as dividend. Series of information are here that you must report. Are you getting what I'm saying now? That is that. Every other sections. That now brings us to what I compiled here earlier, which I'm showing you again. If you come here, you find out that I put up this as the summary. A typical annual report of a company includes this. And all of this is drawn out from what is contained in the Company Act. Is that okay? Any other question? Okay, we'll go on break and we'll return. Thank you very much. To the second section, and please let's put up our cameras on. Let's put up our cameras on. We are back in the second section. Now, at the first section, we discussed on introducing financial reporting. We look at financial reporting from different perspectives, and we came to a conclusion that financial reporting can be seen as a tool for effective communication of financial information, including non-financial information to stakeholders. Also, we went further to talk about that there must be a framework, a structure that supports financial reporting as a system. And we went further to discuss it that this structure includes regulatory framework and conceptual framework. Okay, and under the regulatory framework, we went further to look at it from the perspective of local regulation and local regulation and international regulation. And what we have far before we went on recess was the local regulation, and we are looking at it from the Nigerian perspective. Okay, from the Nigerian perspective, we are able to reach a conclusion that the FRC Act 2011 establishes Financial Reporting Council of Nigeria, who has ultimate responsibility over financial reporting and governance in Nigeria. Okay, and we went further to look at FRC Act, how it creates and establishes the FRC. And the FRC has about 7 directorates responsible for actualizing the objective towards sound financial reporting and governance within companies or organizations in Nigeria. We went further to talk about CAMA, Company and Allied Matter Act, looking at 2020 with reference to 2020, which has become effective. And from there, we're able to see the requirement for us to prepare an annual report, for the board to prepare an annual report. And went further to discuss on annual report, or what we call annual account. What does it comprise? And how does that differ from financial reports, and how it differs from financial statements? Okay, these are things that we've considered. We also look at other regulations that may affect financial reporting from the perspective of industry and for the perspective of whether you are quoted or not. For quoted company, we talk about SEC regulation, we talk about NSC guidelines, we talk about Investment and Securities Act, we talk about, for banks, we talk about Bank and Other Financial Institution Act of 2020, we talk about Prudential Guideline, we talk about CBN Act, we talk about NDIC Act, and for insurance, we talk about Insurance Act and NICOM Guideline. For PENCOM, we talk about, for pension companies, we talk about Pension Act of 2014, which replaced that of 2004. And we also talk about PENCOM regulations. Vis-a-vis other responsibility. Okay, what matters most is that no matter how sound you are, no matter how buoyant your business is and how sustainable it is, your adherence to the principle and the spirit of the law establishing such businesses and regulating such businesses within the industry it finds itself are much more important as the business itself. And we discussed that also. We reach a conclusion to say financial statement is an integral part of financial report, which makes it a subset of financial report. And likewise, financial report is a subset of annual account or report, which is a subset of it. And furthermore, we went further to say, okay, from the content of our position, what are the components of an annual report? And from the discussion you've had so far, and from what we're able to draw out from section 374 up to about section 421 in Companies and Allied Matter Act of 2020, we're able to draw up all of this as a content of an annual report, which encompasses financial reports and financial statements. Okay, now we are back to our discussion. We'll now be talking much more on international. We'll be talking much more on international regulation. Okay, now I'll put this to us, and it will be surprising and probably shocking to many to see whether they are really kept abreast of which body is responsible for financial reporting across the globe. Okay, I'll put that to us now. And if you can answer that question, I'd like you to raise up your hand and so that you can be given access. Okay, now I'll put it like this. The first question is this, let me say international regulatory framework for financial reporting. Which institution or body or organ is responsible for global financial reporting? Okay, who is ready to answer that? Remember, our engagement here will be encompassing, engaging, and interactive. Okay, Mr. Sunday, I want to hear you. I'm coming to you, baby. Mr. Sunday, are you here?
Yes.
Okay, we can't see your face, so sorry. Can we see your face?
Okay.
Okay, you show your face shortly, but pending that time, baby, can you unmute and say your view?
The IASB and the Interpretations Committee.
IASB and Interpretation Committee. Okay, Mr. Sunday, you can talk now. I see you sharing a chat. You said
Okay.
IFAC, but we still want to see your face and want you to talk. Somebody said maybe IASB. Somebody said I think IFAC. Okay. Before I move on, I'll show you what IFAC is. Okay, so that we know the responsibility of IFAC and know whether IFAC is responsible according to what some people have said, before we now resort to going towards ISB and some other ones. Mr. Sunday will be waiting for you, but I'll meet you depending when you come on. Let's see your face. Okay, let's look at IFAC. Who are we? IFAC, we are the global organization for accountancy profession comprising of more than 175 members and asset organization in 130 countries and jurisdictions, representing nearly 3 million professional accountants. Now, IFAC is just a body of accountants. It's like ICANN. ICANN is also a member, you understand? This is a cross-border responsible for accountancy as a profession, not financial reporting as a field within that profession as a whole. I get what I'm saying now. And somebody said IASB, okay? The person that said IASB is drawing it closer home. But let's see how it is. I'll put up a diagram now. I'll try and draw up a diagram and try to use that diagram to explain. I have something here. I have something here. I have something here. Now let me put it one by one. What is here, I would say it is IFRS foundation. What is here, I'll say trustees of the foundation. Here, I'll say we have the monitoring board. Here, I say I have IFRS Advisory Council. Here, I have IASB. And here, I have IFRS Interpretation Committee, IFRIC. Who can guide us through on this chart? Who has anything to say about this chart? Who has anything to say about this chart? Mr. Sunday, are you here now? Yes, I can see your face. Okay. Oh, yeah. Can you tell us something you know about this diagram?
Okay. Yes. About the diagram, I will say that IFRS Foundation operates through these 4 sub-arms. And the primary body that is responsible for the setting of standards is the IASB. Now, why the interpretation committee is responsible for interpretations? Thank you.
Okay. Who else want to speak to this? Who else want to speak to this? Okay, baby.
So I might not be 100% correct, but
Yeah,
I'll
it's
just
your
give my
view in it.
opinion.
It's
Okay.
your view in it.
So I think the IFRS Foundation is made up of people from all over the world who have certain skills and experience in that field, and it is being managed or being controlled by certain trustees, right? And under the IFRS Foundation, we then have the monitoring board, the guys who are responsible for monitoring the standards that are being pushed out by the IASB and reporting to the IFRS Foundation for compliance. Then we have the Advisory Council, who advises on what is happening globally and how that interchanges or intercepts with local legislation or local regulation. Then the IASB guys are the guys who make the standards. They ensure that the standards are practicable and that there is no contemporaneous issue with local legislation. To that effect, we'll have the guys who are interpreting the IFRIC guys, who would probably give out disclosure or exposure papers for discussion to see how the standards that are being made by the IASB is practicable. I think that's the little of what I know about it.
Okay, thank you. Thank you very much. Who else? Before I call name. Who else? Enna.
Good afternoon, everyone. My name is Enahoro Edereveno, so I think I registered my Google with Enna. So Enahoro Edereveno, that's the name.
Therefore, I think you have to go and change that name where on Google or anything so that we can know your name. Understand? So that is the name showing that we can easily reference. Thank you, sir.
Okay. So it's just a short form of my name, so that's all. I will change it to a full listing. Thank you for that. So basically, from what I see here, I don't know if you can hear me.
We can hear you. We can hear you. I think his network is gone. Okay, let me call Nuruddin. Nuruddin. Nuruddin, we can't hear you. You are on mute. Can you unmute?
Okay. From what I understand about this diagram, IFRS Foundation is the overall board that comprises the monitoring board are in position to oversee whether there is compliance with the standard by all the practitioners. Then IFRS Advisory Council, I don't know much. I don't know much.
Okay. I think Mr. Enna is back. Can you take the floor?
Yes. I was trying to say that the IFRS Foundation is actually like more or less like the management of a company. They're the one that manage day-to-day affairs of the accounting regulation internationally. But they actually supervised, monitored, and guided by the trustees, the monitoring board, and the IFRS Advisory Council. That is what I was trying to say. But the people who actually do the field work is the ISB. They're the ones that develop the standards, and actually the interpretation is done by the IFRIC. But the overall body that takes care of day-to-day affairs of international accounting is actually the IFRS board. So basically the IFRS foundation, sorry, but the board are the ones that actually develop the standard. ISB develop the standard. That's what I understand by that, the diagram.
Okay, thank you very much. Thank you very much. Thank you guys for your contribution. Now, again, as we have said, all of us here are professional accountants, qualified accountants. Therefore, we are not here to just read out things to ourselves. We are here to demonstrate our understanding and try to rub minds, like professionals alike, in order to provide solutions to problems. Now, let's look at it from this angle. IFRS Foundation is the organization responsible to ensuring quality and sound financial reporting system across the globe. Later on, we'll go down to the structure in terms of membership of IFRS Foundation. Now, and the word foundation means is a non-for-profit making organization and is a non-governmental organization. And in every foundation that you all know, like a company, where in every company, no matter how small it is, it must have board, which means the aggregate of or the collection of directors. Now, likewise, for foundation, whether IFRS Foundation, whether any charitable foundation or any foundation whatsoever, their own board is known as Board of Trustees. Now, under IFRS Foundation, we know that as trustees. Trustees are those that are saddled to carry out the objective and affairs of the foundation. Okay? Similarly, we now have three organs. I have four organs. Let me go back to the chart. I have four organs or bodies within the foundation as an organization, that the collection of them is what make up the foundation. And what are they? The Monitoring Board, the IFRS Advisory Council, the International Accounting Standard Board, and International Financial Reporting Interpretation Committee, IFRS Interpretation Committee. These are the four organs under the umbrella of IFRS Foundation, and they play individual responsibilities. But unfortunately, the most profoundly known of them all is ISB. Okay, ISB is more known and more popular than the organization itself, which is IFRS Foundation. Is it not shocking to you? Now, similarly, I won't be surprised. Are you aware that, okay, first, which country is most most known countries in Africa? The most popular country in Africa is which country? Who wants to say something? Or you can put it on the chat for me to see. Somebody said Nigeria. Are you sure? Please let us contribute. South Africa. Someone said South Africa. Someone said Africa, West or South. I mean Africa as a whole. Someone said Kenya, South Africa. Okay, I think, okay, the beauty of it is that let us Google it and let us come back to, let me share the screen. Let us Google it here and see for ourselves, okay? Remember, we have, in our open day session, we have told you that we'll be using a lot of resources at our disposal. Morocco is most visited, okay? That is different. Let's look at this. Okay, no, this not a, this like opinion poll. I'm looking for why is this taking time? Okay. No, I'm not talking of cities, most popular country. For city, everybody knows that for city, Lagos is next to for city, Lagos is next to Cape Town, yes, okay, and Johannesburg and co. But for country, this for tourism, this tourism, the main one is not opening. That's where, okay, but let's come to conclusion, whether rightly or wrongly. The most popular, more or less popular country or well-known country in the world is Nigeria. That is for Africa. That is most popular African country in the world is Nigeria. And Nigeria is so popular that Africa is not well known. When you travel out, some people ask you, is Africa in Nigeria? But what is much more known is Nigeria, similar to what we have here. IESB is more known. I believe some of us might be getting IFI's Foundation for the first time, if not possible. But IFI's Foundation is an organization, while every other one is a body within that organization. Now, let's start with IFI's Foundation itself. Let's look at its constitution. Okay. What constitutes IFI's Foundation? Both its membership and its structure. Now, this IFI's Constitution, IFI's Foundation Constitution, which will be made available to you. Okay, now let's look at IFI's Foundation is just a name of a company. What is really working and what is the driver of that IFI's Foundation is the trustees. Okay, and I've explained what a trustee is. It's like a board of directors to a company. Now, what is the membership of the trustees? You find out here that membership of the trustees are 22 in all. Okay, there are 22 in all. And I think I did the analysis here for summary so that you can see it clearly rather than reading it out. Okay, it's somewhere here. Okay, there's a place I summarized it. Okay, but let me come back to where it is here. Okay, you have 6 trustee members appointed from Asia Oceania region. We have 6 trustee members appointed from Europe, that is European Union, 6 trustees appointed from the Americas, which includes North and South America, 1 trustee appointed from Africa. As big as we are, having about 52 countries in Africa, we had only 1 membership. Okay, and it speaks to our financial commitment. 3 trustees appointed from any area subject to maintaining overall geographical balance. Okay, now the trustees has that responsibility to manage the foundation in a manner that tends to achieve the objective of that foundation. Okay, now, but what is now much important is the organs of the foundation. What is the role of the monitoring board? The monitoring board more or less liaises and intermediates between the trustees of the IFRS Foundation and the public authorities. When you say public authorities, government of the world, for example, G20, G7, G8 drives the narrative of what they want by setting like a strategic objective in which the monitoring board will communicate to the board of trustees of the IFRS Foundation in order to provide solutions by way of issuing standards, by way of issuing guidelines, by way of bringing up discussion papers, exposure drafts, and some other things. Therefore, that is the role of the monitoring board. Okay, they are also, public authorities also include regulators across the globe. Okay, that is the role of the monitoring board because the public authorities are majorly the sponsoring members of the foundation. Now, the second one is the IFRS Advisory Council. IFRS Advisory Council more or less serve as the organ that carries out research, the organ that more or less obtain market industry information about development within the field of financial reporting that requires attention, modification, updates, or necessary amendment in order to ensure that the primary objective of financial reporting with respect to sound and quality reporting is attained or achieved. And that is what IFRS Advisory Council perform as a role. Okay? Their role is much more liaising with stakeholders other than public authorities, or to some extent, including public authorities, to gather more information about concerns, areas of future development, areas that require addressing at a point in time. Furthermore, we have IASB. IASB is the technical hub or technical arm of the foundation. IASB is the organ that is responsible for the development of that standard, which is more or less like the end product of ensuring that the objective around quality and sound financial reporting is attained. Finally, we have IFRS Interpretation Committee. IFRS Interpretation Committee, otherwise known as IFRIC, is more or less like it's more or less a sub-arm of IASB. When I say sub-arm of IASB, is that their own objective is to ensure that areas that needed guidance, further clarification with respect to standard that is issued by IASB they take responsibility for that, especially where there is a need to carry out some immediate updates in order to address gray areas or matter that is of high importance prior to issuing of the standard or prior to amending the standard. They issue interpretation guidelines in order to support the application of the standard. Now, later on, you will understand the due process of setting a standard. The due process of setting or amending a standard takes some time, but certain events might require urgent attention. In that manner, what then happens is that you need to more or less make allowance for those urgent needs depending when the standard is updated, amended, or reissued. Now, I always use this example. A road that needs attention, government may not be able to do all roads at the same time for various reasons. One, lack of fund. Two, they can't, even when they have the fund, you can't do all the roads at the same time. Otherwise, you grant everywhere. Therefore, roads that government cannot do now, based on one reason or the other, what they do is that they start to fill in those potholes, at least to make it more tolerable, pending when the road will be totally reconstructed. Similarly, IFRIC, as issued by IFI's Interpretation Committee, are more or less what was issued with the hope of amending the standard or hope of trying to address gray areas or areas that standard has not effectively taken care of, pending when the standard is reviewed or issued. Therefore, in that case, all interpretations that are issued are interim in nature. What do you mean by interim? You find out that if you go by the interpretations, which we are going to see later, both IFRIC and SIC, you find out that not all of the numbers are actually currently in existence, or because most of them have been withdrawn immediately you update the standard, or immediately new standards are being issued. And that is the objective of the Interpretation Committee, which is to give support to the ISB in terms of standard issuance in areas that are gray or areas that need further clarification or guidance. Okay, that is that. Now let's now look at the structure itself of ISB, of structure of IFI's foundation. Okay, I'll show you in this my material here. Now, there's a three-tier structure that IFI's foundation has been built upon. Olawale, okay, I will unmute and you do this task for us. Can you unmute? Okay, can you more or less take us through the structure of IFI's foundation as reported here? Let's see it from a pictorial perspective. We can't hear you. Are you talking? We can't hear you.
What about now?
Okay, we can hear you now.
So you want me to read this out or
yes,
just
read it out for us, yeah.
All right. The IFRS Foundation has three-tier governance structure based on an independent standard setting board of experts, International Accounting Standard Board, governed and overseen by trustees from around the world, IFRS Foundation trustees, who in turn are accountable to a monitoring board of public authorities, which is called IFRS Foundation Monitoring Board. The IFRS Advisory Council provides advice and counsel to the trustees and the board, whilst the board also consults extensively with a range of other standing advisory bodies and consultative groups. There is a diagram here that shows the tier structure with the organs within the IFRS Foundation and their respective functions. The monitoring board is under the structure of public accountability. And the function of the monitoring board is they're a group of capital market authorities, and they provide a formal link between the trustees and public authorities in order to enhance public accountability of the IFRS Foundation. We also have the trustees of the IFRS Foundation, which ensures governance. Their function, however, they are responsible for the governance and oversight of the International Accounting Standard Board, including the constitution and due process for the development of the accounting standards. The third one, we have the International Accounting Standard Board, IASB, which we were talking about as the most populous, even more popular than the IFRS Foundation. And they are responsible for independent standard setting, which means they are the one responsible for setting the standards that we all use today. And they are independent standard setting board of the IFRS. We also have the IFRS Interpretations Committee, otherwise known as AFRIC. They are also responsible for setting standards. But the major difference is that they are responsible for the interpretation of the standards, which works with the board in supporting the application of the IFRS standards. Can you help me scroll down, please?
Yeah, thank you for that. Thank you for that. Okay. Other ones are just other advisory committees that is set from time to time. And over time, these are the committees that have been set over time. Okay. And that's just for information's sake. Okay, what matter is what we have more or less portrayed. And this is a relevant diagram that can speak to what we've discussed. Okay, and you can always see, okay, Wale, I want you to read the primary function or mission of IFRS as a foundation.
All right, sir. The primary mission of the IFRS Foundation is to develop, in the public interest, a single set of high quality, understandable, enforceable, and globally accepted financial reporting standards based upon clearly articulated principles. The principal objectives of the IFRS Foundation include the following. One, to develop this international financial reporting standard through its standard setting body, which is the International Accounting Standard Board. Number two, to promote the use and rigorous application of those standards. Number three, to take account of the financial reporting needs of emerging economies and small and medium-sized entities. Finally, to promote and facilitate the adoption of IFRS, being the standard and interpretation issued by the IASB through the convergence of national accounting standards and IFRS.
Thank you very much. Thank you very much. Thank you very much. Okay, now these are some of the relationship. Okay, let me make it bigger. This is the governance structure, how they relate with one another. Okay, and you can see those that have advisory function and those that report to who. Okay, these are the structure that make up what we have discussed so far. Now let's go back to our diagram drawn earlier. Any question at this point? Any question at this point? Okay. Now, I want you to appreciate, if you don't know where we are coming from, you let's appreciate. Now, let us look at where we are coming from in the field of financial reporting. I put up something here. For us to know the history, the evolution and description of events, starting from 1973, when International Accounting Standard Committee was first established by government of the top 20 biggest economy. No, that was about, it was G8 then, okay? And the G8 are government of Australia, Canada, France, Germany, Japan, Mexico, Netherlands, United Kingdom, and United States. Okay, you can see the chronological order of events that happened between 1973 till date. Significant change to the old governance structure came into being in 2000 and 2001, when IASC metamorphosed into IASB and the creation of IFRS Foundation. Okay? And that was the paradigm shift that brought us to the level we are today. Development has continued to grow and it continues to change from time to time until we get to the promised land. Okay? These are things that you can also have access to for you to know where we are coming from, to better appreciate where we are today. Okay? I can take you to the source before I compile this, but the source is also there for you to look for. Okay? Let me take you to the source. Can you see the source? It has taken me to the source. Therefore, if you want to be a student of history in financial reporting, you can equally go there to see events and how it happens, starting from journey of 1973. Is that okay? That's our journey so far. Any question, any contribution? Somebody said, I can't see. Nuruddin, can't you see? Please confirm. You still said no. Can everybody see it? Can others see it? Please, can you put up a chart? Yeah, they are saying yes. How come you can't see it, Nuruddin? What can you see, Nuruddin, if you can't see it? Initial diagram. We have already changed it, probably your network. Okay. Okay, let's go back. Let us now look at the functionality of IASB itself. We'll go back to the Constitution. Now let's look at the composition of IASB. Now let's look at the membership. 4 members from Asia Oceania region. Remember, for foundation itself, the trustees, 6 members from that area. 4 members from Europe for IASB, but 6 members for the foundation itself. 4 members for America, 1 member from Africa. 1 member appointed from any area subject to maintaining overall geographical balance, which means the membership here is 14, which means the board is made up of 14 members. Okay. And what is the functionality of the board? These are the responsibility of the board. Marian Odum, can you take us through the responsibility of the board?
The board shall have complete responsibility for all board technical matters, including the preparation and issuing of IFRS standards, other than IFRIC interpretations and exposure drafts, each of which shall include any dissenting opinions and the approval and issuing of IFRIC interpretations developed by the Interpretations Committee. 2. The board shall publish an exposure draft on all projects and normally the board shall publish an exposure draft on all projects and normally publish a discussion document for public comment on major projects in accordance with procedures approved by the trustees. 3. The board shall, in exceptional circumstances and only after formally requesting and receiving prior approval from 75% of the trustees, reduce but not dispense with the period for public comments on an exposure draft below that is described as the minimum in the IFRS Foundation Due Process Handbook. The board shall have full discretion in developing and pursuing its technical agenda, subject to the following. 1. Consulting the trustees consistently with Section 15 and the Advisory Council consistently with Section 43, and carrying out a public consultation every 5 years from the date of the most recent public agenda consultation. E. The board shall have full discretion over project assignments on technical matters. In organizing the conduct of its work The board may outsource detailed research or other work to national standard setters or other organizations. F, the board shall establish procedures for reviewing comments made within a reasonable period on documents published for comment. The board shall normally form working groups or other types of specialist advisory groups to give advice on major projects. It shall also consult the advisory council on major projects, agenda decisions, and work priorities. The board shall normally publish a basis for conclusion with a standard or an exposure draft. The board shall consider holding public hearings to discuss proposed standards, although there is no requirement to hold public hearings for every project.
Can you continue?
The board shall consider undertaking field tests both in developed countries and in emerging markets to ensure that proposed standards are practical and workable in all environments, although there is no requirement to undertake field tests for every project. Lastly, the board shall give reasons if it does not follow any of the non-mandatory procedures set out in B, G, I, J, and K.
Okay, now you guys will find out that there's a due process that was emphasized in this that have to be followed for IASB to be able to issue standard. Okay, who can tell me what you understood by that due process? And if you have come by such a due process before, can you just give us an idea? Can you give us an idea of the due process? Who is willing? Who is willing? Okay, now let me take you somewhere where we can look at the due process of setting standard. Now, before I take you there, let me give you a summary. Due process of setting standard means that setting a standard is like setting a constitution or setting an act of parliament. It's not something you wake up, you draw up, and you say this is the act. For example, Finance Act has changed about 14 laws, tax laws in Nigeria, and other fiscal regulations. Now, you can't just wake up one day. Minister of Finance can't wake up through the Federal Executive Council to say, okay, we want to do this and just change it overnight. Because Act is an instrument of the law that is more or less sacrosanct. Therefore, there is a process to developing such so that it can be widely accepted. Okay, and it must be expected to have passed the public policy test. Now, on that premise, what happens here is that standards are jurisdictional, okay? Standards are cross-border. Now, what then do we need to do is to ensure that we carry as many people along as possible, and we more or less incorporate, as far as practicable, a lot of considerations that we address our concerns in order to make the objective attained at any point in time. To do so, you need to have rigorously followed all of the process and get to where you need to get to before the standard becomes an authority. Now, to do that, what then now happens is that you need to more or less have what we call commentaries, discussion papers, get information about areas that requires development, areas of concerns, and some other things. It is this that is turned into getting more or less into exposure draft. Exposure draft is a formalized document like a bill that everybody has to review, criticize, go through hearings. Okay, they give about 3-month period or more to get responses and feedback from stakeholders, which upon doing that, The technical staff of IASB will have to collate it in order to draw up a conclusion which the board will come and see to discuss, deliberate, and vote on. It is after voting on it and it has passed the minimum requirement that it becomes a standard that is now issued. Even when the standard is issued, the last part of the standard is what we call post-implementation review of the standard to ensure that the objective to which that standard has been set to address, it actually are being addressed, or it requires further modification. All of this is more or less like the summary of what it is. But let us look at it in details. Now, I've gone to IS Plus site to look for IASB due process. And I'm going to make the handbook also available to you guys. IFRS Foundation due process for standard setting. Okay, now let me share the screen with you guys. Now, the due process is in 4 layers. The first layer is the research program, which talks about the discussion papers, getting commentaries, getting information, gathering all of such information through public authorities, through accounting firms, through industry experts, through capital market operators, through regulators, through academicians, and etc. The second level is the development of the proposal for publication of what's it called? The standard or interpretation you are trying to issue, which we call the exposure draft. Okay, the third one is redeliberation and finalization, where all that has been gathered with responses are now deliberated upon and voted upon. And the final one is the post-implementation review of how that standard has seemed to have addressed or not to have addressed the purpose to which it has been set. And that is that. On that premise, I want, because I want everybody to be here. Ifechuku, are you there? Ifechuku, can you put up your camera? Are you in a position, I think you are driving. Let me give you, okay, you can unmute now.
So I'm here.
Are you driving?
No, it's fine, I'm parked, you can talk.
Okay, can you read something for us here? Can you take us through ISB due process?
Okay, can I go ahead?
Yes.
IASB due process background. The International Accounting Standard Board, IASB, follows a rigorous open due process. All meetings of the IASB and of the IFRS Interpretations Committee, formerly IFRIC, and its formal working groups are held in public and are usually webcast. The two key documents which govern the IASB's activities are the IFRS Foundation Constitution and the Due Process Handbook, Due Process Steps. Outlined below in overview terms are the due process steps followed in the IASB standard level project, that is, proposed new standards and amendments to existing standards and interpretations developed by the IFRS Interpretation Committee and ratified by the IASB. These steps are research program, developing a proposal for publication, redeliberations and finalization, post-implementation reviews, research program. The IASB's research program involves the analysis of possible financial reporting problems by collecting evidence on the nature and extent of the perceived shortcoming and assessing potential ways to improve financial reporting or to remedy a deficiency. It also includes the consideration of broader financial reporting issues, such as how financial reporting is evolving to encourage international debate on financial reporting matters. National accounting standard setting bodies and regional bodies associated with accounting standard setting or regional financial reporting bodies academics, and other interested parties participate in these activities. This includes through the Accounting Standard Advisory Forum, ASAF. A discussion paper, request for information, or research paper may be released, which are designed to elicit comments from interested parties that can help the IASB decide whether to add a project to a standard setting program. Not all matters included in the research program will proceed to a proposal for a new or modified standard or other pronouncement. Note, during 2020...
Leave that, okay? Let's go to the second one.
Okay, developing a proposal for publication. Once the IASB has formally decided to add a project to its agenda, it proceeds to the development of an exposure draft. The exposure draft is issued for public consultation, and the IASB may also undertake additional outreach activities such as meetings, discussion forums, webcasts, and podcasts and roundtable meetings.
Follow that due process. That's very important. That aspect of exposure draft is the most important part.
Okay. Due process steps when required and comment. Due process: consultation with IFRS trustees, IFRS Advisory Council, and Accounting Standards Advisory Forum is mandatory as required by the Constitution and Handbook. The IASB has the discretion to initiate narrow scope projects that are part of the general maintenance of standards. Projects formally added to IASB standard, these are also mandatory. They require a simple majority vote at a public IASB meeting. Establishment of a consultative group for major projects, example, expert or specialist advisory groups. These are optional. The IASB must consider a consultative group for each major project and explain when a group is not used, and also inform the DPOC. IASB debates and develops proposals in public meetings. This is mandatory. IASB will consider technical papers prepared by staff and feedback from any discussion document published. Paper presented to IASB summarizing steps taken, basis for decisions to not have consultative groups, field work, etc., where applicable, and recommending comment period. This is also mandatory as stipulated by the handbook. This step only occurs once agreement has been reached on technical matters and the exposure draft is then being prepared for balloting. Publication of an exposure draft, normally including a basis for conclusions, and must be accompanied by a press release. This step is also mandatory. It requires a majority of IASB members by way of ballot, that is 9 out of 5 or fewer members, or 10 out of 6 members. Publication of additional materials to support an exposure draft. For example, podcasts, webcasts, snapshot documents, question and answers, presentations. This is optional as stipulated in the Constitutional Handbook. The overall communications package simply reflects the significance of the proposals. Redeliberations and finalization. After the publication of an exposure draft, the IASB proceeds to consider constituent feedback from the consultative process. In some cases, the IASB may decide to re-expose proposals before proceeding to a finalized pronouncement. Once deliberations have been finalized, the IASB's technical staff will prepare the final standard for balloting and voting on by the board. The process may also include the issue of a review draft of the final pronouncement prior to it being finalized. These documents are not part of formal due process, but have the purpose of allowing a fatal flaw review. Due process steps when required and comments. Exposure draft is open for comment for a minimum period of time. This is mandatory as stipulated by the Constitutional Handbook. It's normally 120 days. It may be reduced to no less than 30 days after after obtaining approval from the DPOC. Annual improvements are normally exposed for a minimum period of 90 days. A comment period of less than 30 days requires approval of 75% of the trustees. IASB considers feedback received from consultation process. This step is also mandatory. Feedback determines redeliberation focus priorities or may result in the project being discontinued. IASB considers the need for re-exposure. This step is also mandatory. Re-exposure is not compelled. It is considered where fundamental changes have occurred or where anything new is likely to be learned from re-exposure. Additional consultation through field tests, public hearings, and roundtable meetings. This step is optional. The IASB also consults the IFRS Advisory Council and any consultative groups. Standard is being prepared for balloting. This step is also mandatory. Members intending to dissent from the proposals must make their intentions known. IASB informs the DPOC of its intention to proceed to ballot stage. This step is also mandatory. The IASB must explain why re-exposure is not considered necessary where applicable. Publication of standard, normally including a basis for conclusions, and must be accompanied by a press release. This step is mandatory. It requires a supermajority of IASB members by way of ballot. That is, it requires 9 out of 15 or fewer members or 10 out of 16 members. Publication of materials accompanying a standard project, summary, and feedback statement. It is mandatory for new standards and major amendments to standards. Other non-mandatory materials will also be published, such as podcasts, webcasts, questions and answers, and presentations. Post-implementation reviews. The IASB must conduct a post-implementation review of each new standard or major amendment, usually after they have been applied for around 2 years. This means that the post-implementation review process will commence around 2.5 to 3 years after the effective date of the pronouncement, but may be deferred in some cases. The post-implementation review process can also be initiated in other circumstances, such as regulatory changes or concerns raised by other parties.
Thank you very much. We are very grateful. Thank you very much for doing this for us. Okay, Miriam Ogbu want to ask a question.
Hello, can you hear me?
Yes, we can.
So I wanted to ask, since IASB is like the technical arm of, they're the ones in charge of setting the standards, are there members of other committee in the IASBs? Like, are there members of the trustee monitoring council that in the IASB, or the standard is started as in you set the standard from beginning to end in the IASB and then they report to the trustees?
Okay, thank you very much. No member of other committee belongs to the IASB, but they have relationship across board. I think I'll have to share something with you. I've shared it before, but I need to share it again to give us some information. Now, let me go back to my compilation. I shared this with us. Now, see how they interrelate. They are independent organs. Are you getting it? They are all independent organs, but they work interdependently, which means they have places where they handshake. Do you get what I'm saying now? First, IFRS Advisory Council advises both IASB and the trustees. They are like advisors, whereby when you need their support, commentaries, contribution, you understand? Some, they pass it to you directly. Some, you seek additional support. Therefore, that is where you get them involved. But they are never a member of that because their roles and functions are totally different. And if you come back to what we have shown earlier, with more or less identify the roles separately. Okay, if you come back to the 3-tier governance structure, if you come back to this 3-tier governance structure, you find that their roles are totally different. IFRS Advisory Council is not within this tier structure because it's an advisor. That's why it is separately shown that they provide advice and counsel to both the trustees and the board. But the 3-layer structure are monitoring board, the trustees, and both IASB and IFRIC. Do you get what I'm saying now? Therefore, even no member of IFRIC belongs to IASB. IFRIC is like a sub committee of IASB, which is independent of IASB, but they still report to IASB because all what they are doing is in support of the output, final output of IASB. That's why even interpretation that is issued by IFRIC is subject to the approval of IASB. Are you getting it now? Does that make sense? Okay, thank you. Any other contribution? Okay, let's go back to this so that we can close that chapter. Now, he made mention of DPOC. Can you remember? Okay, DPOC means Due Process Oversight Committee. Okay. Now, also, as at August 2020, they have issued a revised due process handbook. But again, there's no material deviation from it. If you want to read further, you can always go to that resource material. Okay, now let me show you where we have access to all of the activities of IASB. Okay, all of the activities of IASB, because IASB is the functioning organ of the foundation. That is the heartbeat. That's where everything lies. And that's why IASB is more or less like the foundation itself. Every other one has supporting system to the IASB. Therefore, all of the documents are here. I think for those that have made financial commitment, all of the standards have been given to them. Okay, but here we have the depository of all of the standards. There are 3 books that are issued by IASB. The red book is for standards that are new and those that are not yet replaced. Blue book is for those that are existing and that will be replaced in the immediate future. And the green book is the one that provides illustrative industry guidance and some other elaborate material for our use. Whereas in each of the standards also you have part A, part B, part C. Part A speaks to the standard, part B speaks to the basis of conclusion, and part C speaks to illustrative guidance. Now in 2021, the blue book is out. Part A, all of the standards, these are all of the standards. I think those that have gotten it will confirm that they've gotten all of these standards. Part B speaks to the basis of conclusion, and part C speaks to the guidance in terms of practical scenarios. Okay, now this is the Constitution. Okay, this is the Constitution as at 2020, August, that is updated. You know, they update their Constitution, I think, every two years or more. Okay, electronic taxonomy. Have you ever come across taxonomy? Who can tell us what taxonomy is? Can somebody tell us what taxonomy is in accounting? Who wants to contribute? Please, can you raise up your hand? Who has an idea of what taxonomy is in a country? Okay, somebody asked a question. In which country is IFRS Foundation based? IFRS Foundation, which is through the ISB, is based in UK. And the last count, I think the register office is in Canary Wharf or something. But let us check. Let us check the contact address. But they are based in UK. Okay. They are not based in the US because US has its own strong institution separate from ISB. They call it FASB. Okay. But they have been working under a joint project of convergence since 2005. Okay. Let us look for ISB. Let me go to contact us, ISB. ISB contact address. Okay, where ISB is located. Can you see it's in London? Okay, the specific place in London, I think is Canary Wharf or something. Okay, I can further check. Can you see Canary Wharf? Yeah, that's where they are. Because during the days I do participate in part of the sections, it was in Canary Wharf, and I think they are still there. Okay, okay, that's the headquarters in London. Okay, that is it. Another question is, what are the financial members? Who are the financial members of IFRS Foundation? Okay, anyone can be a financial member, but they have a standing financial members. And I think the member countries are based on government. G20 is #1 financier. We also have, okay, I think I have it here, I compile it. They have 3 sources of income: public authorities, professional accounting firm, and internally generated revenue through their publication and some other things they use to raise revenue. Let me show you on, I think I compiled it. It's somewhere here. Okay, this is it. The funding. Now, okay, who asked that question? Nuruddin. Okay, I want you to read it up. Okay, can you read it for us, Nuruddin?
Yes. IFRS Foundation funding. The IFRS Foundation funding has an annual income of 27 million euro to 30 million euro. The income comes from 3 main sources: voluntary contributions from jurisdictions around the world, voluntary contributions from international accounting firms, and self-generated income from sales of subscription services, publications, and licensing of intellectual property.
Okay, can you show us the percentage? 52% is from public funding.
52% from public funding, 21% self-generated income, and 27% contribution from accounting firm.
And you found out that that's why professional firms, for the big 5, the big 6, they are much more vocal, and they are more or less drivers of some of those things you see, because they contribute more than a quarter. Why government of nations, members of Christian, IFAC, ICANN, and all of them contribute through IFAC. IFAC is a major financier from public authorities, because IFAC itself is an institution of government of countries around the world, which is driven by G20. You know what G20 stands for? Government of the biggest 20 economies of the world. Okay. Okay. Any other question there? Taxonomy, group of accounting concepts. Babajide, can you explain that? It seems you put much more of vocabularies there. What does taxonomy mean in accounting? Can you unmute? Babajide?
I think it's like a dictionary that just explains some elements in our concepts or in financial accounting.
Is it a dictionary or something that's
So
that's grouping or classification of elements?
It's
like standardization of presentation.
Yes, it's like a standardization of all the concepts that is in accounting.
Okay, you do us a favor. I'll share something with you, and you are going to read it off for us for our better understanding.
Okay, sir.
Yeah, that is this. Okay. Okay, can we look at it? Before that one comes up, can you read this for us? Can you see it?
Okay.
Yeah.
A taxonomy is a grouping of financial concepts known as elements in which each concept is defined similar to a dictionary. The US GAAP taxonomies contain over 15,000 elements representing commonly reported financial concepts for US GAAP financial statements and are available and maintained by XBRLS US.
You know what XBRLS is?
No.
Okay, who is IT centric here? Is IT centric? I need somebody to raise hand.
XB
is a machine learning language.
Okay.
Yeah, who wants to say something? Nobody wants to say something, but okay, I'll show you.
In now, the accounting profession, a machine level language in accounting profession.
Okay, you can read more of it. Okay. Now, okay, if you go back to this place, you also have taxonomy here. You can see electronic reporting. Okay. You can see all of the taxonomy here. Every of the standard has taxonomy. The essence is that some bigger corporation has more or less created a form of reporting that is fully integrated to all of the IT system, whereby things are not created individually. Therefore, every aspect of standard that has implication on element of financial statement are more or less taken care of up to the granular level. Okay, now you can see taxonomy for each of the books. Okay, for Red Book. Now let me just pick for revenue, for example. Revenue. You can see all of it. Let me just pick illustrative examples. Therefore, they create it in such a way that you could be able to reference and assess those things. But again, as we move on, when we get to technological aspects, we can annex that understanding. Any other question as we wrap up international regulation? International regulation for financial reporting is what we have discussed, not international regulation for accounting as a profession. Accounting as a profession, that belongs to IFAC. Okay? And IFAC is also the body that more or less set up IFRS foundation. You also need to read more about that. Okay, any other question? Any contribution? Now, okay, let me put this to you. And I want somebody to guide us in trying to profile most suitable suggested solution to this problem. Okay. Okay, next time we meet, okay, I think before, let's have a break and let's come back to the last section. The last section, we answer this question. Let's first of all read this question. Baby, can you read the question? And in 10 minutes time, when we come back, I want us to provide a solution to this question. That will lead us to the last section of this discussion.
Okay. So argued by Faramade, a prolific accountant, as thus: the methods by which accounting standards are developed
Continue.
differ considerably throughout the world. It is often argued that there are two main systems of regulation that determine the nature of accounting standards, i.e., a rule-based system and a principles-based system. What is required? Briefly explain the difference between the two systems and state which system you believe is most descriptive of international financial reporting standards.
Okay. I think before we go on break, I'm going to divide you guys into two groups, okay? And I'll put you on a break. You go on, what do you call it? Break room section. I'm going to do that now. And please, I want your effective participation. I'm doing that now. Just give me 1 minute to put you guys into rooms. I'm going to create 2 rooms. Okay, I've opened the room. You guys can join now. Okay, guys, we are welcome back to the final episode of this session. And I think we give ourselves a task and we are divided into 2 groups. And the question reads thus again: argued by Faramade, a prolific accountant, as thus: the methods by which accounting standards are developed differ considerably throughout the world. It is often argued that there are 2 main systems of regulation that determines the nature of accounting standards, being a rules-based system and a principles-based system. Now, the bone of contention now is that we are required to briefly explain the difference or differentiate between the 2 systems and state which system do we believe is most descriptive of international financial reporting standards as issued by IASB. Group 1, who is your lead? Group 1, who is your lead?
Ify.
I am.
Okay, Ifechukwu, can you go on?
Yes, so that's not everybody. So in my group, we agreed that one, just because we have principle and rule-based standard doesn't mean that if it's a principle-based standard, it's entirely principle-based, and if it's a rule-based standard, it's entirely rule-based. Number 2, we agreed that in the case of IFRS, it's a principle-based system that of accounting standard applies.
Then we mentioned that principle-based standards are standards in which the standard setter says if you encounter a situation A, you apply either option, 1 or option 2. It gives you a little room for flexibility based on what you feel is appropriate, and based on your judgment, what you think applies most to your situation. But the catch is this: it says you can apply either option 1 or option 2 or option A or option B, but you cannot introduce a third option, meaning that even though it's a principle-based system, there is still some form of rule structure in place. For rule-based standard, it's a situation where the standard setter tries to predict or maybe respond to situations that may occur by setting standards, uniform standards that he expects people to or organizations to comply with, so that there is some form of did I say similarity, and there's no room for disparity or any form of misunderstanding. But the catch is this: you can't always predict the situations that may occur. Take, for instance, this coronavirus situation. In a country that uses a rule-based form of standard setting, they won't have predicted coronavirus. So I'm sure that as at early 2020, they would have been racking their heads on the kind of standards to put in place to ensure there's uniformity by time companies start applying their preparing their reports, financial reports for 2020, so that there is no form of deviation or confusion. So in such situations, pending when the rules are created, there is still room to apply your subjectivity or judgment. So you can see that it's not entirely principle-based or rule-based. There's still some form of exchange between the two forms of standard setting. Thank you.
Okay, thank you, Group 1. Group 2, who is representing you guys?
Yeah, it's me, Shegun John.
Okay.
Okay, so in my group, we agreed that the IFRS standards is more of principle-based than rule-based. The rule-based system, like we have in the US, is when the regulators put forward rules that the company must follow in creating their financial reports. And it doesn't allow for flexibility. You have to be rigorous about it, and even if you default, you can be taken to court. So, but alternatively, in the principle-based system, managers of companies, of organizations are allowed to use their own discretion in certain situations, because not every situation could be predicted or understand ab initio. So that is why the principle-based approach is rather more effective than the rule-based approach, especially as it has to do with the IFRS system.
Okay, sorry, I was just talking to myself. I think, sometimes you have to be alert that I unmute myself currently. Now, for Steve that is just joining us, welcome. Can you put up your camera? Let us see you, because the picture I'm seeing does not look like you. Okay. Now, who is going to support Ifechukwu in Group 1 or dissenting view from that members of that group or somebody that can also support Ifechukwu in group 1 based on something that you might not have mentioned or anything that can more or less elaborately explain your group position further. Likewise, group 2, be ready for that. Group 1, over to you. Who is supporting or dissenting from group 1?
Okay, I think I can add 1 or 2 things, but she's actually said quite a lot. Just to add to what she said, for the rules-based accounting system or approach, because it's based on set of rules, it tends to be less flexible. So you can't have people react just the way she analyzed with COVID immediately, because it's based on set principles or it's based on set rules. In as much as positively, it allows for good comparison. So you can compare apples with apples if everyone was following a rules based, as opposed to if you were following judgment or your own personal interpretation. But the crux is that with the principle base, you can react accordingly, following underlying concepts based on your judgment and your interpretations. Now, with respect to the second part of the question, which was asking, what do we believe to be the most descriptive part of IFRS? We agreed in our team that IFRS piggybacks on the principle-based approach because it works with underlying concepts and principles, as opposed to a rule-based approach, which we know that just like with the US, they follow a particular set of standard. But the IFRS allows each jurisdiction, this is the standard, what obtains in your domestic or in your local legislation, how practicable and applicable is it? But this is the standard you ought to follow, or this is the standard we think best to follow in a particular situation or to a particular treatment or accounting cost.
Okay, thank you very much. Group 2. Group 2.
Yeah, so I think that the principle base is too rigid when compared with the principle, and too rigid means that it becomes, let me say, too complex.
Which one is rigid? Because you are mixing it up. You are saying principle
the
based.
rule based.
Okay.
The rule based now. The rule based is what I say is rigid, which can, the rigidness can bring about complexities in the application of accounting standards, while the principle based gives a little bit of flexibility in the application of the concepts, depending on the situation or the peculiarity or a particular entity or the situation the entity finds itself. Even though different countries have different, for example, the US, they follow the rule base, which is gaps, while other countries, they follow the principle base, which is IFRS. So, and we mentioned earlier today in our lecture that since 2005, there has been
collaborative.
Yes, going on to ensure that there's a convergence. Yes, between the principle base and rule base. That's my submission.
Okay, thank you very much. Steve Wokocha, welcome. And you will be the umpire in this case. Okay, as the umpire, I'll display something on the screen which you will assist us to read. Okay, and after reading that, we'll come to a conclusion. Okay, okay. Now, this is up for you to read on behalf of the class.
Okay, so it says the principle-based financial reporting system seems to be the most popular accounting methodology in the modern day business and accounting environment. Most countries opt for a principle-based system, as it is often better to adjust accounting principles to a company's transaction rather than adjusting a company's operations to accounting rules. The International Financial Reporting Standard, IFRS system, that's the most common international accounting standard, is not a rules-based system. The IFRS states that a company's financial system must be understandable, readable, comparable, and relevant to current financial transactions. Rules-based financial reporting system is basically a list of detailed rules that must be followed when preparing financial statements. Many accountants favor the prospect of using rules-based standard because in the absence of rules, they could be brought to court if their judgment of the financial statements were incorrect. The initial general accepted accounting principles, GAAP system, is a rules-based accounting methodology used in the United States. Nigeria as well, in the days of the SARS, Statement of Accounting Standards, and in many other countries prior to the adoption of IFRS. Companies and accounting professionals must adhere to the rules when they prepare and present their financial statements. This allows investors an easy way to compare financial information of different companies.
Now, we won't look at the answer yet. Okay. I want you to continue from here.
Okay, so he said there are 10 key concepts of the rules-based GAAP system. Regularity, consistency, sincerity with an accurate presentation of the company's financial situation, the permanence of methods, no expectation of compensation, prudence with no semblance of speculation, continuity, then dividing entries across appropriate periods of time, as well as full disclosure in all financial reporting, then good faith and honesty in all transactions. It gives us a bit of the advantages and disadvantages of the principles-based. Now, the fundamental merit of principle-based accounting is that it is broad. Its broad guidelines can be practical for a variety of circumstances. Unlike the rules-based system that restricts the latitude availed, let me take that again. Unlike the rules-based system that restricts the latitude availed managers of businesses in the treatment of similar transactions, which requires more of precise requirements, which sometimes compel managers to manipulate the statement to fit what is compulsory. The leading problem of the principles-based system is that there is no one set of accounting method or basis of measurement that has been universally adopted for the treatment of similar transactions. There are currently more than 110 countries that use IFRS as their accounting standards, while the US uses the rules-based GAAP method. That means investments, acquisitions, and mergers may require a different lens when comparing international competitors such as Exxon and BP, which use different accounting methods. The critics of principle-based accounting system believed it gives companies far too much latitude and may not prescribe transparency. They believe because companies do not have to follow specific rules that have been set out, their reporting may provide an inaccurate picture of its financial health. Advantages and disadvantages of the rules-based system. On the other hand, when there are strict rules that need to be followed, like those in the US GAAP system, the possibility of lawsuit is diminished. Having a set of rules can increase accuracy and reduce the ambiguity that can trigger aggressive reporting decisions by management. In the case of rules-based methods like GAAP, complex rules can cause unnecessary complications in the preparation of financial statements. And having strict rules means that accountants may try to make their companies more profitable than they actually are because of the responsibility to their shareholders. That was the case for Enron and WorldCom. In Enron, in 2001, Enron shareholders lost almost $75 billion in value after the company kept its major debt off its balance sheet. The company ended up filing for bankruptcy. WorldCom, an internal audit found billions of dollars in fraud at WorldCom in 2002, where assets were inflated by as much as $11 billion. Fake accounting entries were found along with inflated revenues. Next paragraph says, is IFRS that different from US GAAP? According to the American Institute of Certified Public Accountants, IFRS resources, the United States is moving towards IFRS. Unlike what happened with other countries, ISB and FAS have been working on convergence for many years. And these two standards still very different. For many years, countries developed their own accounting standards. They were rules-based, principles-based, business-oriented, tax-oriented, in one word. They were all different. With globalization, the need to harmonize these standards was not only obvious, but necessary. By the end of the 90s, the two predominant standards were the US GAAP, generally accepted. Sorry, you went too much.
Okay, I went to...
Yeah.
Okay, sorry.
Yes, okay, just hold on. It said by the end of the 90s, the two predominant standards were the US GAAP, the generally accepted accounting principles, and IFRS, the International Financial Reporting Standards. And both standard setters, the ISB, that's International Accounting Standard Board, and the FAS, that's the Financial Accounting Standard Board, initiated a convergence project before IFRS was actually adopted by many countries. Now that the US is clearly moving towards IFRS, as re-emphasized by the recent SEC, that's the US Securities and Exchange Commission proposal, one wonders what the potential impact of the differences between these two frameworks on the financial statement will be, and how financial executives can anticipate the adoption of IFRS in order to minimize the last-minute adjustments. Once the convergence effort is acknowledged and its result identified, are both standards still different? Now let's look at the principles-based versus the rules-based system. One of the major differences lies in the conceptual framework. US GAAP is rules-based, whereas IFRS is principle-based. The inherent characteristics of a principle-based framework is the potential of different interpretations for similar transactions. This situation implies second guessing and creates uncertainty, and also requires extensive disclosure in the financial statement. In a principle-based accounting system, the areas of interpretation or rule or discussion can be clarified by the standard setting body and provide fewer exceptions than a rules-based system. However, IFRS include positions and guidance that can easily be considered assets of rules instead of sets of principles. At the time of IFRS adoption, this led English observers to comment that international standards were really rules-based compared to UK GAAP that were much more principle-based. The difference between these two approaches is on the methodology to assess an accounting treatment. Under US GAAP, the research is more focused on the literature, whereas under IFRS, the review of the facts pattern is more thorough. However, professional judgments is not a new concept in the US business environment. The SEC is addressing this topic in order to find the right balance between the educated professional judgment that is acceptable and the guest professional judgments.
Now, as umpire, let us answer the question.
Okay.
The question between the two groups.
Okay.
Can you answer it?
Right. Okay, so from what I've read so far, you can see clearly. Financial reporting, of course, is open for judgments in terms of treatment of transactions. One of the things that the US-based rules approach does, I would say, is a bit, it confines you. Maybe also what it does is also that once you've treated the transaction based on what is there in the rules book, you know that issues such as litigations and then judgment as well, different interpretations, you know that yes, it clearly that's the opportunity for that to arise is limited. So you know that definitely the rule says treat a transaction X this way. You've treated it, you can move on. But with IFRS and knowing that clearly that the world is a dynamic environment, the business environment in which we operate changes every day. In as much as you want to limit the possibility of fraud happening, you also want to make it a a reality that every transaction being treated as professionals, you would have considered as much as possible all the possible interpretations to arrive at the best judgment in applying a particular standard. That which, what it does is that it expands the scope of what you are looking at in terms of how you treat your transactions for every company. You have to recognize that different companies face different situations. So to say you want one particular rule and get everybody to just streamline to only that rule, it then makes accounting more monotonous. But then if you allow the principle-based work, what it does is that it opens professionals to be able to apply their judgment and then have discussions in arriving at the best solution and actually treating transactions that affect different companies in different jurisdictions. The things you have to realize is that companies have to survive in different jurisdictions. You can say at times, maybe you have two oil companies, one is based in Angola, another one is based in Nigeria. Even though they want to report under similar standards, the business environment is clearly different. So in applying accounting standards, it's important that you recognize the peculiarities of the different environments that each company operates in, while not deviating from the overall goal of ensuring that, yes, your financial statements are both consistent and transparent. So it's just the principle base that gives you that room to consider all possible scenarios and at the end still arrive at the most appropriate option that you can debate and say, yes, this was the best, bearing in mind the peculiarities facing each company. That is my little submission, sir.
Thank you very much. Thank you very much. Okay, you've wrapped it up and you've summed it up as a whole. Now let's go back to the main question. I'm trying to search for the FASB US GAAP handbook. Now, what rule-based is that, okay, I think some of you were not, I think most of you started your career under IFRS, okay? Very few of you might have started under SAS, okay? SAS is purely rule-based, whereby you are not going to be using idea of principle, okay, what is the substance of transactions to think about it, or you have similar transactions that doesn't have a clear standard and you have to harness conceptual framework or use requirement of another standard that looks similar to address it. Then there was nothing like that. Everything was straight jacket. And that's why, if you remember, some of you that did ATS, probably at ATS level, you might still meet SES, where you have things like container account, we have realty account, we have solicitors account, we have voyage account, we have that, all of those accounts is because it is under rule base. And you must follow it. It's not, you are not learning any principle, you are learning format, because the regulators, which is the Nigeria Accounting Standard Board, then equivalent of Financial Accounting Standard Board in the US, they've developed every possible transaction that might occur within an organization. They've developed the method of accounting, and it is sacrosanct. Whether it is rightly developed or not, once it is considered as the rule, you apply by it. It's just a template. Put your figures and that is all. Okay? Until adoption of IFRS, where we have to shift away from the rules to principle. Now, what is principle? Principle is not that you give guidance, you give like overall perception of how things have to be done, but managers of the business rather rely on the understanding of the principle in order to treat the implication of transaction enter into. Now, it has its own disadvantage. Likewise, it has its own advantage. Similarly, rule-based has its own advantage. Similarly, it has its own disadvantage. But the question is this: reality of time is that there are no two things that are the same. And that is where rule-based fail, because you can't use the rule for A for B because they are unique. Therefore, let us create latitude. Latitude means let us create a situation where managers can use their judgment in treating transaction without materially deviating from the whole gamut of what the rule is equally trying to achieve in the first place. Okay, but later there's also an argument that can we also say that IFRS itself is purely principle? When I come back to the solution, you find out that you cannot say IFRS is purely principle based, but it is more of principle based than what? Rule based. But US GAAP is purely rule based. Again, there's argument in the UK up to today that the UK FRS, which is Financial Reporting Standard of UK, which is only applicable to small companies in UK and local companies, but not for companies that are listed in the London Stock Exchange or listed in any other exchange. The UK FRS is still more considered by argument within the UK to be more of principle-based only than IFRS. Now, later on, you also see that some of the argument is that IFRS, though it tilts towards principle-based, but there can be principle without some element of rule. And you also find that as we move on, that there are some aspects of IFRS that is rule rather than principle. But when you look at it, probably you can conclude that IFRS is 80% or more of principle and 20% or less of rules. While US GAAP is close to 100% rule, but over time, because of the convergence, they are likely going to shift. But again, how fast will they shift is what we don't know. Is that okay? Now, that is that. Now, let's look at this. I want Mariam Odum to read the question again, and let us look at what was our suggested solution.
Argued by Farayola, a prolific accountant, as thus, the methods by which accounting standards are developed differ considerably throughout the world. It is often argued that there are two main systems of regulation that determine the nature of accounting standards, a rule-based system and a principles-based system. Required, briefly explain the difference between the two systems and state which system you believe is most descriptive of international financial reporting standards. Suggested clarification. A rule-based accounting system is likely to be very descriptive and is generally considered to be a system which relies on a series of detailed rules or accounting requirements that prescribe how financial statements should be prepared. Such a system is considered less flexible, but often more comparable and consistent than a principle-based system. Some would argue that rule-based system can lead to looking for loopholes. By contrast, a principle-based system relies on generally accepted accounting principles that are conceptually based and are normally underpinned by a set of key objectives. These are more flexible than a rule-based system, but they do not require judgment and interpretation, which could lead to inconsistencies between reporting entities and can sometimes lead to the manipulation of financial statements. Because IFRS are based on a conceptual framework for financial reporting, they are often regarded as being a principle-based system. Of course, IFRSs do contain many rules and requirements, often lengthy and complex, but there are practical features that IFRS's rules are based on underlying concepts. In reality, most accounting systems have an element of both rules and principles, and their designation as rules-based or principle-based based on defending relative importance and robustness of the principles compared to the volume and manner in which the rules are derived.
Okay, the floor is open. Any contest, any agreement, any additional information you want to put up?
Just a question.
Yes, sir.
The question was asked in our group, but we couldn't finalize before you had led us back. So based on your explanations, we can, as a global accountant, can we say we are principle-based or rule-based? Although based from your explanation, that even there are some concepts in IFRS rather, that are rule-based. So what can we say as a global accountant that we are practicing? Rule-based or principle-based?
Okay, I think we need to reframe the question. It's not, rule-based principle is not about accountant. It's about the standard you are using.
Okay.
I get it.
Okay.
The question is the standard we are using today, there's no doubt about it that it is IFRS. Now the question then is IFRS rule-based or principle-based? And we have concluded that IFRS is more of, not that it is more of principle-based than what? Than rule. And that is why in most quarters, it is concluded that IFRS is principle-based. Because if something accounts for 80% or more, therefore is that thing in its whole entirety. That is what it means. Do you get it, sir?
Okay, what I meant by as a global accountant, the IFRS came up as a result of we want a standardized, a global standard of accounting practices. Am I right, sir?
Yes, sir.
So it is being practiced by accountants all over the world. So the purpose is primarily that companies in Nigeria, companies in UK, companies in US, everybody use the same accounting principles in preparation of their financial reports. So that is why IFRS was set up. So my point is, if we want to look at it globally, can we say we are principle-based or rule-based? So that's why I said as a global accountant.
Okay, I think from my own understanding and from my own exposure, I can say vividly that in today's world is a mix of rules and principles. Remember that not all countries have, as at the last count of putting this together, is about 110 countries that are IFRS compliant out of about 194. You understand what I'm saying now? The question then is, not all countries have adopted IFRS. For example, Ghana has not fully adopted IFRS. I think their convergence might come up later. Cameroon is coming up with it and some other things. But the question then is this. For most countries, they are rule-based that are not IFRS compliant. And for those that are IFRS compliant, they are more of principle-based. And for like some countries that they have not adopted IFRS, but their standard has been tailored towards the conceptual framework of IFRS, such as New Zealand and Co. They have things like New Zealand IFRS. Those ones too are more or less principle-based. Okay, Miriam, you can unmute yourself. Yeah.
I wanted to ask, like, for principle-based approach, like with this discussion now, I kind of like had a lot of flexibility with principle-based approach. And I know that that's not so much of the case, because you can't say as a finance manager, you just bring out, maybe to handle issues, everybody brings out different points of view. So I wanted to give me like a life standard scenario where a principle-based can be flexible, like using maybe one of the standards. Let me know how flexible you guys, I don't know how to put the question.
Okay. Now let me give you a practical example that is common to everybody. Under SAS those days, the rule is that when you have motor vehicle, you depreciate it for 4 years. Are you getting it?
Yes.
Every motor vehicle is depreciated for 4 years. There are rules for different building. Then in Nigeria was, I think, building was 40 years or 20 years. Patent was 10 years. You know, they did all sorts of things. These are rules. Whereas a car that you depreciate 4 years, 6 years, the car is still being used and there's nothing in the book. Some 2 years, the car has worn out and is still in the books. That is rule for you in the days of SAS. But today, if you buy the same car, if your company, the same company buy car in Lagos, And the car in Lagos will be flying Apapa from Wharf to Ijora every day. And you also buy another similar car. That one will be flying Abuja office, FCT. The question is, the useful life for those two cars will not be the same on your system. One can be 8 years, the other can be 5 years. Because you can't tell me car that they will use in FCT Abuja will last far longer because the rate of usage differs from the rate of usage in Apapa. Or car that you buy for the purpose of status car for your managers will not be the same thing the one you buy for Uber. Do you get that? The question then is that the principle says that use your judgment to say, based on your experience and historical pattern, what is likely to be the useful life? For example, another principle base is that when you make allowance for credit losses for trade receivables, what you call provision for doubtful debt, look at empirical data, look at the circumstances there, look at data and try to analyze and estimate what is the likely loss based on certain events. But under our SCS those days, they will tell you any debt that is between 1 day and 30 days, charge 10% provision. Anything between 90 days, charge 20% provision. Anything above this, charge 80% provision. Anything beyond 360 days, 100% provision. But the question is that the circumstances differ across businesses. There are some businesses whereby receivable is as long as 2-3 years, long-term receivables. For example, if you are buying aeroplane, it's not something you will pay next week, 60 days grace period and all sorts of things. You can see that. Therefore, that is what principle base is saying, even though it can be subjective to some extent. That is why to back up that subjectivity is why IFRS require extensive disclosure. So that when you do, IFRS is saying that you can go ahead to do anything you want to do. But by the time you disclose, you are now reporting yourself that people will now see how reasonable you are. Imagine I say our car in our office, it is 10 years. When I disclose that and I put basis of that estimation there, people will now know how reasonable the managers of such business are and whether they can continue to deal with them or not. You know, one thing is that when you create a latitude that you can do anything, but these are the consequences and you must bear the consequences. Therefore, people will, it's like self-regulation. Principle base is more or less of self-regulation. Rule base is like, this is how you have to do it. If you don't do it like that, you have violated the law. You understand? But again, if you read one of the pretexts here, it says that principle based allow you to align principle to business transactions and operations, rather than rule based that force business operation to leave its strategy or anything, to force it to just comply with accounting. As accounting rules or principles or accounting as concept or convention is a support system to the business itself. It's not the driver of the business. You can say now, but before, under rule, accounting rule now serve as a driver of business, whereby where business is supposed to take some initiative, they can't take it because of accounting rule has blocked them. And therefore, what is now the essence of being in business? But again, there is nothing that is totally good, and there's nothing that is totally bad. The question is, which one is the lesser what? Evil. One thing is that some people have asked me, I said, in the future, who says there won't be another principle that overrides what's it called, principle base? Or who says future, as event unveil itself, like what is happening with COVID-19, who says we will not return back to rule, to say who overrides principle? For example, I'll give you a clue. There is a discussion paper now, let me show you here, on goodwill, that goodwill should now be amortized. We are still having that discussion. Let me share it with you here. Can somebody mute, please? Now let's go to consultations. These are consultations. It's still at request for information level. Remember, you now know the difference between request for information, discussion papers, and exposure drafts. You know, we've discussed that, okay? Now, this is it. Okay. I think it's discussion paper level now. He has moved there, yeah. This is it now. Now, what they are saying now is that goodwill, is it not better for us to now be amortizing it rather than leave it the way it is and subject it to impairment? And impairment basis is subjective because there are some companies that refuse to impair their goodwill, coming under one disguise or the other. Coming under one disguise or the other. Now, if you remember, if you follow it before now, even when during the period of IAS 22, IAS 22 was replaced by IFRS 3 in 2003. IAS 22 was where our own local standard then, SCS, draw from. SCS 27 those days, I think so, yeah. And IAS 22 are in alignment. During those days, up to 2011, or was it, no, up to 2008, goodwill were amortized, which means goodwill, they amortize it. But arguments came to say, no, it shouldn't be amortized on the basis of principle and some other things, and it moved to impairment. Down the line today, the argument has resurfaced to say goodwill should be amortized. Some said no, it shouldn't be amortized, even though there is deficiency in the application of impairment assessment by companies, because companies still continue to carry goodwill unnecessarily when it is evident that the goodwill has been impaired. Now we have had various consultation and everything. Even IASB did consultation in Nigeria, okay, which I participated, and I think I did the recording. I can share it. Once I check the recording, I will share it with you. But I can share you this document so that you can read there the argument from both parts. And some of us has come to the middle. Our own proposition, okay, which myself and the partner in Deloitte, we discussed, was that let us meet at the middle point. It is not going to be acceptable to say amortized, because it's more or less we are going back to Egypt, okay, where we come from, rules. And we can't say we should continue just to subject it to impairment, but why can't you have a model that tends to balance the two, so that the objective is that no amount of goodwill that's supposed to have been charged through profit or loss remain uncharged. And therefore, we are coming up with series of models, and that's what led to this discussion paper, which commentary has been gathered. And at a later date, it will come out by way of exposure draft. But again, as it is now, you can see those of the commentaries. And I think I'll check the video, I'll post it to you guys. I'll post the link to you so that you can also listen to it. It's about 2.5 hours session, so that you can see views of people and some other perspective, and also the extent of disclosure. But this document is available. I'm going to share it with you. I think there are two of these documents I can share. One is so short, summary, and the other one extensive, okay? COVID-19 is now bringing more things to the table, and the question then is, certain things might also change in future. Nothing is cast on stone that principle base can rule forever. Tomorrow we can have another base. If you remember, we have said that before now, we have different bases to which standards are set. Some are tax-based, some are business-based, some are politically based, and all sorts of things. But again, we have come to a conclusion that principle-based is what we favor much more in today's world. Is that okay? Does that address your concern now?
Yes, it does.
Okay, thank you. Any other contribution, question, or otherwise? Any other contribution or otherwise? Okay, some of this document I'm going to share it with you. I'm looking for a document of US GAAP I have. The handbook is thousands of pages where every transaction that a company can come across has been identified and has been, the way you are going to account for it has been defined. There's nothing like you are using your own judgment to that extent. You are going to comply to the rule. Otherwise, in the court of law in the US, you'll be seen to have violated the rule, which is you have violated the law, and penalty will apply. Okay, any other one? Okay, I'll share bulk of these materials to you guys as we move on. Okay, sorry, I'm trying to send some. Probably you can download it. I've sent you guys, you can pick it up now, IFS Foundation Constitution, I've sent it. The other one I want to send is this discussion paper on goodwill and impairment. Please, you can go to the chat. If you are using phone, you'll be able to download on chat. It's only those that are using laptop, but I'm still going to officially send it on your on the WhatsApp group.
We'll wait for you to send on the WhatsApp group.
Yeah, okay. I hope you guys are picking what I'm dropping, but if you're unable to pick it, okay. If there's no other question, okay, I'll leave the group open for the next few minutes so that you can download what you need to download, and we'll call it a day. Okay, thank you very much, and God bless you all.
Sorry, Miwa, just a question. So tomorrow, is it 2 p.m.?
2 p.m.
Okay, thank you.
2 p.m. on this same link we're using.
Yes, the link, if you check your link, it is all through the stuff. Therefore, once you have been successfully logged in today and you have your account on Zoom, you're automatically allowed in. And take note, you can't use any 2 devices at a time on your account because it has been programmed that even if you want to switch, you have to off one to enter another one. You can't use your phone and this at the same time. That control has been built into it. And at that time, you must switch. You can't do the 2 at the same time. It won't go. Okay. Okay, tell other colleagues, some people see have problem logging in because they didn't follow the instruction. The instruction is that you must have Zoom account registered, and it is free before you can be able to log on into this section. Thank you very much.
You're
And God bless you guys.
Mary, who is waiting?